So obviously in the morning we had sent over our plan and we were talking with the team. And Dr. S brought up a great point to look at the 2-year treasury.
Let's talk about principle number one, which is game planning. And so one of the first things you need to do to be able to actually trade an economic news release well is before it, you've got a game plan. You've got a game plan what you're going to trade. You've got a game plan what you're going to do if the number comes in better than expected, worse than expected, in line. You want to think about how much risk you're going to take on if the number comes in better than expected, worse than expected, or in line. And that's what these guys went through. And so, Brian and Dylan, if you could just walk through how you actually game planned for this economic release, what the process was for that, and what your takeaways from that were.
Yeah, sure. I can start us off. So for us, when we look into like CPI or we think like big macro data that people are positioned for, because like it's all set on a specific date, like we'll look back on everything over the past year and we'll start reading like expectations. The firm like provides really good resources in terms of like research emails. And so we'll read through all of those and then read through the ones that were of those specific dates. So if I wanted to look back in October, I put in the date October, look through, okay, what were expectations going into it? What were reactions? And then like what was follow through and kind of do that for every single one. Then look into like how we perceive funds to be positioned, like what would be considered a surprise, what would catch people off sides, and how would that play out. Once that plan's kind of laid out, we just go through, okay, what numbers would correlate to what reaction, and what trades do we have at our disposal that we feel like we can really take advantage of, and what are the ones that are like scariest or could have the highest risk that we can avoid. And then we'll build situations based off like release date correlates to like our plan. So it's like scenario equals outcome. And it's kind of like a tree that expands out.
All right. So just in short, we're game planning for, so CPI on this day was expected to come in around 7.9%, correct?
Correct. Yeah.
So we're basically game planning. If CPI comes in at 7.7, we want to get really long. Fair?
Sure. Yeah.
If CPI comes in at 7.8 or 7.9, we want to get long, but maybe not as long. Fair?
Sure. Yeah. I think 7.7, 7.8 would have been around the same. 7.9 would have been a different story.
Okay. And I would disagree with that, but that's okay on the 7.9 one, but that's fine. And that's why we game plan. 8.2, if we came in at 8.2, that's not good. We want to get short.
Yeah.
And then if we came in at 8.4, we want to get short. And we were expecting actually the market to go down maybe 5-6% if the CPI came in around there. So we're laying out the different possibilities for how the CPI print can come in and what we're going to do. And then inside of that, we're actually deciding, okay, so let's say it comes in at 7.6 or 7.7. That's a good number for the market. We want to get long. Well, what do we want to get long? How do we want to express that trade? And we're going to game plan what we're going to buy. And to get long, what did you guys game plan to buy?
Yeah, so in our game plan of picking actual assets, it was mainly around liquidity, given that this event release is 8:30 a.m., 1 hour before the market opens. We were paying really close attention to correlation and liquidity being the two main variables. And so within that, we chose some of the main high betas. We decided to pick a little bit wider of a basket because at that point in the morning, relative strength is very hard to pick out when all the names are pretty much moving in the same legs. But by the open and by the morning session, it becomes abundantly clear which one of the high betas are the strongest versus the weakest. So we ended up picking Tesla, Meta, Amazon, and Qs.
All right, so we're thinking about where we're going to get long, where we're going to get short, where we're not going to do anything in our game plan. We're thinking about what we're going to buy, what we're going to short in our game plan. And then we need to also be thinking about risk. So if it comes in at 7.7, how much are we going to risk? If it comes in at 7.9, how much are we going to risk? 8.2, how much are we going to risk? 8.4. We're game planning. We're warming up and preparing. All right, and then we're deciding what we're going to trade. All right, let's roll the tape.
If you want to learn 3 real-world setups that our professional traders use, including the simple but highly effective setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free online trading workshop that we're currently running. This is a 100% free, intensive workshop where you're going to learn more in a couple of hours than from years of online education. So don't miss it.
This is because August 10th, when CPI beat, right, the treasuries reacted really negatively. Like even though we spiked and we continued higher in markets all day long, the 2-year treasuries faded. And shortly after, a few days later, the rally stopped and we rolled over. And this led to a pretty significant downturn over the succeeding few months. And so because of that, we were watching this really closely. And obviously, when the reaction came, super bullish, we decided not to take the print by itself. We waited for the news to hit, talked to some guys about it. And honestly, I think that's an adjustment we can make where we see the opening momentum. You could feel like 268, 270 very easily on the long side. And then from there, put on size when you actually know what the news is. I know a lot of guys found success doing something of the sort. And so we got long 271, realized the fill was pretty bad. And this was the upper end of our targets, despite how bullish the news might be. And so we took off some into like 272, 273, pay for it. And then when 272 firmed up, we rebought all of it. And realizing how big this news was and how big of a shift this could be, we decided to buy a basket. We bought Meta, we bought Amazon, we bought Tesla, all with the idea of we need to identify what market leaders are truly going to be, or market participants are truly going to be buying. And we felt that like buying things with the highest beta just made the most sense in this situation. Incredibly liquid, easy to get in and out, easy to fill, and follow through would just be clear because volume should be immense if it's there.
Let's take a moment here and talk about the breaking news trade. So the second key principle that I want to highlight from your review is a trading edge. So there's trading edge and what we call the breaking news trade. And the breaking news trade is once the CPI number hits, you immediately react. And in this case, the CPI number was really good for the market. It came in lower than expected, which meant that the market was going to interpret this as a good data point for inflation. All right, this was a data point that inflation was getting a little bit better, and only one data point, but still a data point. And the breaking news trade is to get long right away on that CPI print number, making a breaking news trade. And you guys mentioned that you can do better at this, you can make more on this, and that's a whole source of edge. So we're going to game plan for an economic news release, and then we're going to have this breaking news trade as a way to actually make some money. And then you guys talked about the basket and buying a basket. And am I right in assuming that when you were buying the basket, you were buying this for a trend trade, or am I wrong in assuming that?
Definitely. It was kind of both. It was the idea that we would first gauge initial momentum. We knew like immediately we were filling within like a minute of the news hitting. So we knew like there was no way that everyone that needed to buy was already long. So we were taking off a lot of legs into the front side as well.
Okay. So a subset of a breaking news trade, which is not right on the number, but observing strength and then getting long strength after observing price action. Fair?
100% fair.
Okay. So you're doing that. And then you decide to do that by buying a basket of high beta stocks, correct?
Correct.
Okay. So let's talk about this. Why the high beta stocks, and how do you feel about that?
Yeah. So the reason we picked these names was the idea that we wanted to almost guarantee beta as best we could, and having the most liquid instruments, having the market leaders that everyone was watching, and if portfolios that we believe were sitting cash that needed to get in, like this would be the first names they hit. We also felt like a lot of these were incredibly beaten down, so it made sense that if portfolios were going to kind of reverse their recessionary trades and start putting on long exposure in equities, that it would begin in a lot of these instruments that have just been absolutely slaughtered over the last 6 months, a year.
And the other main reason being, this was the aggressive scenario that played out, but we planned other 3 scenarios, and a neutral scenario and slightly bearish scenario, it's a lot harder to capture in the individual names because the beta may not be there if the reaction isn't extreme in the market like it was this time.
Okay, 2 thoughts on, so when you decide, hey, I want to get long the market after an economic news release, the first thing you do, if we were to teach you, and you guys were new traders, if you were interns, we would say, express the trade long by buying SPY, Qs, IWM, or volatility product. That's how we would teach you at the beginning. First step, trade the market indexes. And then the second step, after you have some success trading those market indexes, is to say, well, maybe you want to trade a high beta name that will give you a little bit more juice above the market indexes. So maybe some of the high beta names, maybe the Metas, the Teslas, the Netflix, whatever the high beta names are at the time, the Googles, the Amazons, are going to go up more than the market indexes. Maybe you want to focus on, maybe you think Apple is going to go up more than SPY or Qs, and you focus on that. Maybe it's at a better price. And that's sort of the second iteration of getting good at playing an economic news release. All right, so you're going to start with the indexes. When you get a little bit more sophisticated, you may be choosing a high beta name. And then the next step is something that Lance talks about, which is looking for even a better opportunity than indexes or high beta names. Something that's really, really beaten down, or something that's going to go up more than the marketplace on this particular day. It turned out that the growth stocks were the best performing stocks on this particular day. It turns out that buying Shopify, the Rokus of the world, the Arcs of the world, really outperformed the individual indices, really outperformed some of the other high beta names. They've been beaten down a lot. When inflation starts to temper, those stocks are going to catch a bid more than others, because that means that they're going to do better in an environment like that. And then the other stock that a lot of people on the desk started trading was Tesla, because it had been beaten down a lot. And so that actually didn't work out that well, Tesla, or didn't work out as well as maybe the growth names. But the third iteration of how you actually express this trade is looking even more specifically at making the most out of your particular day. And so thoughts on maybe trading some growth stocks, or maybe next time trading a beaten down name that can go up even more than the indices or a high beta name?
Yeah, that's a completely fair argument. I think for us, it was 2 components that made us lean to leaders. One was liquidity, and the guaranteed beta Dylan was talking about. And then the other component was that optionality was there on the market leaders that we were unsure of if you would get the same amount of liquidity on the options end. That just allows us to make more adjustments to positions quicker. Say like if we squeeze Reddit open and we run an ATR on the leaders, we could box the trade and then like from there stay in a core position with a great average. But I think it's completely fair to say like we could have looked at growth. One of our team members, Carlton, brought it up, I believe Friday morning, and we ended up taking decently sizable positions in Shopify for the day 2 leg. But yeah, I think it's definitely fair to realize the strength after the initial move.
Okay, so the first principle is game planning. The second principle is the strategy, the breaking news trade. The third principle is what you should trade. All right, so that's that's a summary of how we think through that. The fourth principle I want to talk about is using technology. And you talked about making a basket trade. Now, I'm going to assume that what you meant by buying a basket of stocks is that you manually started buying a basket of stocks. Am I correct?
Yes.
Okay, so I want to give you a challenge for you guys to think about. Next time, I want you to think about actually building a basket with technology where you can automatically hit a buy button and enter in with some risk. Now, I don't want you to do this with a ton of money because I want you to experiment with this. But I want you to think about, hey, if you were going to buy Meta and Amazon and Google and AMD on a day like today to express your long, I want you to be thinking about building a basket where when that economic news release hits and it's favorable for the marketplace, you hit a button and that button gets you into all 4 stocks. Now, you don't have to pay the offer to get into all 4 of those stocks. You can TWAP in. There's different ways to execute in. But I want you to think about when you use the term basket, thinking of it as using our technology. All right, and so you can do that with our technology where you can, when you got long, when you wanted to get long, you literally could have built a basket to short SQQQ, get long SPY, get long Q, get long Apple, get long Amazon, get long AMD, get long Shop, get long Roku, get long ARK. You could have paid the offer to get into all of them. You could have TWAP'd into all of them. But I want you to be thinking about that as a potential strategy. And in a situation like this, you really do just want to get in. It's not going to happen a lot where you just want to push a button and get in. But I think you should be thinking about this. I think your team should be thinking about this on days like this. Thoughts?
Yeah, I think that's a good idea. I think on these events, that would make it easier to execute. One of the nice things about having me and Brian here is we're able to execute on a few names at the same time and on 2 accounts. But I think that would make it easier for both of us managing a single account each.
Yeah, and the basket will literally say, like, let's put $1 million to work or $2 million to work. I mean, we'll start small. Let me put $1 million to work. Let me risk X. I hit the button. I'm in. Start filling, and you'll be able to do more and make more money in special situations. All right, let's keep going.
Throughout the moves, we just kept making sure to pay ourselves into extensions higher. By the time the open came around, we were in 60% of most positions or less, just giving us workaround of like if dips were to come or like different permutations were to come, things were to reverse, the 2 years started to turn. Like we wanted to make sure we were in a position that no matter what, we were locking in like 5 figures plus, and with the ability to risk and add way more on different permutations. Dylan, do you want to go into what we did at the open and also what we brought in long volatility wise going into the open?
Yeah, so I can start with the long volatility into the open. So our plan, like Brian mentioned, was we outlined it and sent it over to our team. And into that, we didn't want to be directionally biased going to this event. We never know what the data is going to come into, but we wanted to be long volatility. They were pricing the at-the-money straddle around just under $8. So it wasn't an amazing deal or anything, but we thought that we could get some follow through into today.
There's 2 types of edge. There's I should get long on the CPI print because it's a really favorable print and it's likely to trend for the day and maybe even 2 days based on this news catalyst, which is what we're talking about. And so if you were to just get long, you would make money. That's edge. That's one type of edge. If I do this 10 times, I'd make money. A couple times I'd lose. A lot of times I'd win. Sometimes I'd break even. I'd make money. Getting long with a good CPI print, I'm going to make money. That's edge. The second part of edge is actually how you express that trade. So you can just get long certain products, or you can, through the expression of your trade, gain some edge. And that's what you guys are doing. You're actually making more because of the way that you're structuring your options with this particular news catalyst. You're making more money getting long by how you're actually structuring this trade. And so that's something that's a little bit more of an advanced topic. But that's something for people to aspire to. Traders at prop firms don't just get long stocks. They also buy calls, and they don't just get long calls. They find lots of different ways to find edge with options. And that's what you guys are doing here. Let's just skip through. Let's keep going.
I think you could be holding more to closer to expiration once you do have the directional follow through. That's something we're going to test out. Just realizing we're not making as much on the purely long vol trades. And so that's something I'll monitor for going forward and for the rest of this trade to see if pricing changes that much into Friday. But for the current positions that we were running, we were cycling, like Brian said. We were trying to rotate risk. That way, at no point we were too risk on, and we didn't feel like we had the room if it pulled in too much. It shouldn't have been too uncomfortable. So it was very important here that we don't take too much heat, and I feel like that was what we did really well. The one trade that kind of came back closer to our average during pre-market was Tesla, and as soon as it did, we recognized this, immediately sold it to the first bounce, and from there it was. That was the point of putting on the basket, right? We want to see we don't know what leaders at that point are going to get bought. Tesla was extended the most of the downside. So pre-market had the best risk reward, but off the open, it was the only one being sold on volume, the only market leader. And so that was really notable. So we switched to what else can we trade? Immediately we said we should be adding back Amazon. Amazon had a bid. We've spoken with Carlton and Team Swang pre-market. And we really liked this one because Amazon is also connected to SPY as consumer discretionary, and we saw that SPY was relatively strong relative to tech during pre-market and early in the session. And so here we added back some Amazon, and we also flipped into Amazon options. At that point, we were looking through the option chain, and we realized that Amazon calls were pretty underpriced for this Friday. Amazon 95 calls, this is before it took out the high in the morning, about 15 minutes off the open, 95 calls trading at 60 cents, 60, 70 cents. Amazon, even at these prices, has an ATR of 5 points. So that essentially means if Amazon falls through an ATR and the market has any kind of follow through buying today after that CPI print, these calls go in the money. And at this point, we actually also sold 40% of the calls. The calls I was able to bid into around here for 60 cents, and up here they were worth well over $3. And so at that point, on a risk reward basis, it made sense to just kind of pay for the entire trade in one sale, and then the equity is just additional profit, and we're riding the remaining calls into tomorrow. And so that's
if I can jump in there real quick.
Yeah, go for it.
So when Amazon, like Dylan said, we weren't expecting to be paid so quickly, right? And I remember Carlton telling it like everyone like, okay, this is huge, we need to be holding, and we felt like that was exactly right. Like we definitely need to be holding. Like there's a good chance market closes at highs, and there's no way if long portfolios haven't gone in yet, right? Like 60-40 portfolios that had to go to cash, like all these guys like weren't able to participate. There's no way in 30 minutes they fill all the positions they need to fill, right? Like that's just pretty much impossible. And so knowing that we were most likely to see follow through, we wanted to make the hold. However, when we get an expansion like this, right, so aggressively, we felt like it just makes sense as intraday traders to take advantage of our skill set to continually sell, right? And so we were selling equity 97, 98, and at 98, we began even selling our calls. We got down to 60% of the position in calls, and the conversation began then. Yeah, exactly. Like, okay, we want to hold our position, but there's a spot for us to take advantage of an exhaustion, right? I even told the team that I was like, honestly, Amazon looks like a short, and understanding that, realizing this is a spot where we can box a portion of our trade. If we think that in the short term, like price is going to be coming down and we're delta long like 4,000 shares, honestly, we could have perfectly boxed it. And I think moving forward, like that's the move to make. But I just shorted 2,000 shares really quickly against the high, and we just rode the position lower as a way of cash flowing the moves in between the big moves we want to hold for.
That's an excellent example of you guys using your day trading skills to take profits even during a trend day. That's an excellent job of you guys coming up with a strategy to take profits into extensions, overextensions, taking some profits and using that as an excellent best practice when you're trading a day like today. Take those profits into spikes, book some profits, and keep going.
100%. Thank you, Bill.
Appreciate it. Yep, that's a really good addition. That adjustment we made is just a way of capitalizing on more of the short term, while not taking heat on or any kind of give back on the longer term idea.
You talked about how Carlton and you guys were talking about how we don't want to take profits off of our core positions because of the day we're in. And so the other trade strategy that's inside this day is what we call a trend day. There's going to be certain days where there's a high likelihood that we're going to finish at the high of the day for the entire market. And we call that a trend day. We've got a super important news catalyst behind us. The market's most interested about inflation. We've got a number that shows us that inflation may be getting a little bit better. That may signal that the Fed will be less aggressive in their rate hikes. This is excellent news. This is a 10 out of 10 news catalyst. So when the market is above its opening range, when we're above all of our VWAPs and all of our indices, and we're showing breadth with our ADD line, and we're seeing really strong tick readings, we're going to conclude that that's a trend day. And that's a whole nother video. We got a video series on trend days, but it's a trend day and we want to play for that. And so you guys are setting up your trades based on this being a trend day. And that in of itself is an important thing to recognize what you guys did, and you adjusted your trading accordingly. So we're playing for a trend day, playing for high of the day for our core positions. Okay, moving on.
When we're thinking about what Brian said, big money managers needing to get into these positions, Amazon, we noticed, had a really big bid, and we understand how they get into these positions. They're looking for liquidity pockets, and they know the morning and the close those are the two strong liquidity pockets for the day. So we noticed relative strength in Amazon during the morning, and we were very, very keen on watching what else was really strong. We noticed semis had quite a bit in them, but we had missed the morning move, and so we were just very, very watching the leaders closely, just because any of those leaders could have started having a bid during the day and into the close. And so Apple, we noticed holding up really well, so we just bought that and scalped out some more risk intraday and sold the rest on the close. And this one.
Yep.
And then for the overnights, we took some Qs and we started a bunch of the continuation trades from our earnings by picking some of the stronger names relative to the market.
One thing I want to touch on real quick is like highlighting back to our points of like, all right, if we were to look at today objectively and go, what do we do really well and what can we do better? I think things where we've really improved is the communication of like pushing for more, right? Like we took the scalp, and Bella mentioned this, and I think it highlighted like what exactly we're doing and what we needed to be doing to really capitalize on today. Like into the pre-market, we were only up maybe like or into the open, we're only up maybe like 10,000, 15,000. Like it was really like, okay, like it's a fine trade, but in the reality, right, for how big this could have been, and this was like, that's nothing. And so we were pushing like, okay, where else can we find like pockets of opportunity? We were pushing that with the team. We were looking, and that's how we found those Amazon calls to begin with. That's how we moved to Apple later. I think those are just really key concepts of like, okay, if this is such a big event, like where else is there money? And every second counts. I know Lance brought that up too, of like, it's whoever can think of it faster, whoever can think of it faster, whoever has it planned and pulls the trigger gets the best prices. And I think we were very, I guess, successful in that kind of mapping. And we also were always preparing for worst case permutations. Like we're like, what if Q's pulls in 50%? What if this whole thing reverses? What if, and we felt like we were never offsides with it. And I think in pockets of high volatility or events that especially are incredibly hard to plan for, it's very easy to get overzealous in the longs. And I think 6 months ago, we definitely would have, and probably one of these positions would have not worked and we'd have lost like 10, 15K for no reason. And so I'm very happy with that development of things.
I want to talk about firm resources. So I want to set the stage for people that are listening. You have research that helps you to determine what to do when the CPI print comes in that adds value. On this day, we're lucky enough to have Dr. Steenbarger give his insight into what he thought the markets could do during the 11 o'clock meeting. And Dr. Steenbarger talking about how this could be a trend day, and how Dr. Steenbarger was talking about how this could be, in the short term, a game changer for the marketplace, because this number was important in terms of inflation. And then, as you mentioned, Carlton, our floor manager, is encouraging you guys to recognize this as a trend day, another resource at the firm. Lance is here on that day as well, talking about stock selection and opportunity. And then I was talking about how midday that, all right, we were up millions of dollars. Don't tell me that. We were up millions of dollars by 11 o'clock in the morning. And based on my experience running this firm and seeing us have really, really big days, we were just getting started. And I think sometimes people take their foot off the gas and they're like, oh, I'm up a ton of money because I caught the breaking news trade. And then they don't tack on an extra 50%, maybe even an extra 100% from where they're at in the morning onto these days. You want to make the big days bigger. And that was the point I was hoping to impart to you guys, which is good that you're up a bunch by 11 o'clock, but you can do better. Good that you've caught a little bit of this breaking news trade, but there's so much more opportunity to come. And what you guys did super well is find some of the easy money trades to tack on to a solid open to build it into an even better day. These days, we want to make even more. And so I love how you guys were focused and kept your gas on the pedal and made more on top of more.
But we never down more than like $1, like if we were even down $1. Like and I think that just speaks to when these macro trades are there, and Bella mentioned this, like you don't even need to draw down. Like if the momentum is really there, there's no need to draw down. And I'm really happy that we were able to pull that one off.
I think that's a really important observation you guys make about risk, which is on the best days, you don't have to draw down much. When you're right, you're gonna be right away. And that observation is important because it'll allow you going forward to trade even bigger. If you're not gonna actually draw down much and you're gonna be right away, then you know you can get in real big. If it doesn't work, you get out. But you'd be kind of tight with that stop, can't you? After a CPI print, or after the trend starts to develop, that allows you to get even bigger next time, and maybe pull out another 20% because of that super solid observation that you guys made. So last point, one of the things I'd love for you guys to tack on to this review, and I love that you guys put this together. Thank you so much for doing it. There's a lot to learn from here, and I love the way that guys are using these video reviews to share their best trades and their best days with each other. One of the things that I want you guys thinking about is specifically where and how you could have made more. So having a part of this review where you're going and you're saying, you know what, I could have been twice as big here, and my stop would have been here, and my target would have been here, and I still would have been inside my guardrails, my risk guardrails, and I could have made a little bit more. Here's where I could have put on even more risk. Here's where my entry would have been. Here's the stock it would have been in. Here's the time of the day where I would have entered. Here's where my stop would have been. Here's where my target would have been. Specific. And that idea is when we're doing well and we're having fun, then we want to build from that. And the way we build from that is specific reviews. Be hard on ourselves to do even better on our best days. Does that make sense?
Here we're sharing an inside look at a discussion we had about trend days. In it, we cover 10 key points. 1. Identify a catalyst that surprises the market. 2. Utilize technicals to assess the potential of a trade. 3. Utilize filters and ETFs to find what's leading the market. 4. Market internals. 5. Execute and manage trades in a trend day. 6. Risk accordingly. 7. Maximize the trade with the info that's provided. 8. Stay with it. We're going to talk specifically about the afternoon pull-in trade. 9. Identify trending price action early in the day. And 10. Where to place stops during a trend day. We went through and created chapters for each of these 10 things below, so feel free to skip around and use this like a resource towards building out your own special situation playbook.
We've tried to lay this out in a way where we kind of break down our idea of setting up a trend day with an example, which would have been last Wednesday or last Thursday, the CPI print and the PPI print, and look at it from how we deconstruct and use Catalyst to be able to decipher whether this is something to look into for a trend day. And then from a technical standpoint, what would we look for out of a stock to see that it's going to be a trend? And then what can we decide from the Catalyst to understand what specific stocks to trade? And then sort of moving a little forward would be, what trades are we looking for? How does this set up? What is our execution strategy? And what are the patterns that we're going to sort of use to build into the trade as it develops throughout the day? And then finally, just at the end, some examples of executions, how we see them, and sort of breaking them down. Overall, just from top level, we look for a large macro catalyst. I think the bigger the catalyst for us would mean the more surprise it is to the market. So the more the market has not priced the catalyst in, would give us a bigger reaction in a trend that we would be looking to take advantage of. So specifics, obviously 1110, the construct of this year's market regime has been the worry around inflation. How high will interest rates go? That's the projection that we have seen everybody taking, is when does it stop? And there's been a lot of uncertainty around that. And then I think finally the CPI print came out and showed that inflation, raising interest rates has done its job, and this is kind of the first data point that said inflation's come down, job growth, unemployment's gone up. Like we've got these as kind of a line in the sand that says finally it's done something. Maybe we don't need to go that much higher. And I think that for us was just a trigger point that then turned a lot of the uncertainty and said, okay, we've got some concrete data points that are in our favor, and maybe that is a specific scenario where funds want to put some risk on. Because it's such a change to the sentiment, we were expecting funds to sort of be aggressive that day and chase. And it is the big money that we're looking for. It is the ability to find the big money in stocks across the board, so that they create those cleaner patterns. They're less sort of algorithmically driven, and they just make it a little bit easier for us to sort of follow trend without getting chopped out or unnecessarily reacting to something that's not really there. So from our standpoint, just finding that really big macro catalyst that is a complete change to the sentiment is sort of the first go-to. And I think that's obviously the market level. We can project that down into just individual stocks, which is if a stock catalyst comes down in the future, how well does it change the sort of sentiment shift of the stock and what big money you're going to do with it. So that'll be our top level starting point. In terms of tickets for this specific catalyst, obviously every catalyst is going to be different, as I've said. But just our understanding of this catalyst was, okay, so start market indices are all of a sudden in play. We're in a situation where sort of SPY skews down, small caps are all pretty beaten down, and maybe there's an opportunity to get some good risk reward for the big funds. So first port of call would be look at market indices. Second, we've got then the high beta stocks. They're going to be a little bit cleaner, sort of less prices that they touch. And maybe we have some cleaner levels that they'll respect. So we can look at finding those high beta stocks that trade a multiple in the market every day and sort of gravitate towards them as a cleaner way of trading SPY Qs. And then just some other opportunities would be, given that the change in sentiment was the upside and we've been in quite a depressed situation, let's find those stocks that are potentially have a really high short float, and then we can see those exponential moves. Maybe as momentum traders dive into them, then we get the big funds, and then we get that short covering squeeze. In this case, just the treasury bonds, TLT would be our use, and just how interest rates rise, TLT would go down, and vice versa in this case. If interest rates are coming off, then we'd look for bond yields to push higher. So that would be another example of something we can trade. US dollar, given the strength in the US dollar, just if money's coming off the sidelines and actually being put back into the market, maybe it's an opportunity to go short the US dollar. And then the other side of this is, if we're going to hedge against the US dollar, maybe gold's a good thing to trade, as also just if investors don't want to go full risk on and they want to put money to work, but maybe not in the most risky assets of the market, then maybe gold is also a good product to trade with that in mind. So yeah, based on the 1110 catalyst, these were our sort of go-to ideas out of the gate of just what we could trade that day. Then just looking a little bit forward on what the technicals would be when we first pull up one of those products. What is it that we look for on a chart? And I've highlighted in green stocks with room to trend. I think that's the biggest thing, is where does it sit on a daily chart? Where does it sit on a 60-minute chart? Most importantly, is there room to move? Are we breaking ranges? Is there space above if we're going long, where there aren't necessarily going to be resistance level, where there are sellers sitting at? Because our goal would be to find stocks where one side, supply or demand, is just drastically in control. It gives us just a little bit more room and a little bit more bias in that sense to really build a bigger position in that trend and just let it move. So that was our sort of top line based on technicals. But then there are obviously other few things which we would take less seriously, which would just be severely oversold stocks that are going to bounce. Stocks with some clear levels to trade off of, maybe break and retest. Maybe we break range and come back and retest at sort of 9, 10 out of 10 level that we can defend pretty clearly. Volume, we'd want clear directional volume and size, predominantly done on the offer, not the bid. I think the best way of looking at these trades is they're not necessarily overextending, but they are just grinding all day. And with that, just that grind is holding EMAs. The most important thing is to see the bigger picture here and not necessarily trade the 1-minute chart and trade the 5-minute chart and just manage it off a 5-minute position. And for me, that would mean making sure the trend is intact on that 5-minute chart. So I personally look at 9 and 20 EMA, just make sure there's a lot of divergence between the two, and maybe they converge later on in the afternoon when we get a big consolidation. But most of the time, the 9 is above the 20, and the stronger the trend, the more we respect the 9. You know, if we're going to respect the 20, but most of the time we respect the 20 at least throughout the day, unless we get a pullback to view up and maybe squeeze through, but then get back above and continue holding them. So that's what we look for from an EMA's perspective, a volume perspective, and then finally just the tick. You know, we've noticed these market strength if we're looking blanket wide at the market. Yeah, strong 1,000+ ticks, steady sentiment, not seeing many ticks below 0, not especially not below 500, and just steady strength throughout the day is what we'd look to see on a technical level.
Yeah, this is really great, first of all. But I just had a couple questions because you touched on some key points that I think are probably worth like getting into more. But like you talked about like the reasons the market would go up when you were talking about the fundamentals, right? And you mentioned the big players, which is absolutely true. Like, you know, we want to be looking for that. And you also mentioned when you're talking about searching for the types of stocks, like there's high beta. You also mentioned the highly shorted stocks. So like given all that, if I were to say like there are two main reasons why the market can rip hard for 1 or 2 days. I'm not talking about a quarter or a month, but I'm talking about that, you know, we're trying to capture a trend day, right? So if we're even just talking about 1 day, if I were to ask you, like, what are the 2 reasons it can rip? I mean, you already mentioned one, which is, you know, the big players are positioning, they're actually buying individual names. What would be another reason why we could rip?
Probably just a lot of people offside.
Yeah,
a lot of people shorting and having to unwind big positions.
right. And in that case, if that's one of the reasons, you're probably going to see those highly shorted stocks squeezing. And so like one of the things that I notice is that with these trend days, sometimes, you know, each trend day will have like a different nature, right? You have your catalyst, and now you're looking at the whole market and you're kind of asking yourself, okay, you know, is this the beaten down junk stuff that's leading today, or is it high beta, or is it relative strength that's leading today? And sometimes I can highlight something about the day, because one of the things that I remember is like, I think on day 2, it was all the junk that ran really hard. And by junk, I just mean the beaten down stuff, the ARC stuff, like the Shopify's and stuff like that. And a lot of times that's kind of an indication of a short squeeze, or even a bear market rally, as opposed to quality names, you know, getting bid up and bid up and bid up. I'm not saying this was a bear market rally because everything went up, but I think that's a really important factor, because the day before the CPI came out, if you looked at the put call ratio, it was extremely high. And I don't know if you remember, but we sold into the close that day on pretty light volume on a very high put call ratio. So people were positioning short, and they were buying puts into this print, whether that was, you know, hedging going on, or people were actually bearish. You know, it doesn't really matter, but I think sometimes a little bit of color like that can add fuel to the fire when you're planning that next day.
Are you taking inventory of these things as the morning progresses and looking for a trade in the afternoon, or is this something that you're already thinking about before you come into?
As far as what?
So like the beaten down names, are you scanning the markets for like what is leading?
Yes, and I do that every day, but especially on a day like this. So I have a filter. In fact, our whole team has it, and it's super simple. You guys can build it very easily, and it takes all the sector ETFs and even different asset classes like TLT, the dollar gold stuff you've mentioned, and it will show the percentage above or below the opening print, and then it will also show the RVOL. And so I can rank this, and then I have it color coded so I can just see it really easily. But you can rank it by RVOL to see like which asset classes and which sectors are in play, and then you can also rank it by above or below opening print and how much, and that can tell you what's leading for the day, at least since the open, right? Because the big money they're not really executing in the pre-market as much, so you know it's really useful on gap downs, gap ups, stuff like that, to see, okay, like what's getting bought since the open. And so for example, I'm pretty sure on day 2 of this trade that you're talking about, ARC was like right at the top of that list. And so when I see that, I'm going to then go through and I'm going to check out, you know, the Shopify's of the world and PLTR and like all that kind of stuff. Does that make sense?
Yep,
Yeah,
definitely.
that's very interesting. You know, it just makes it so much easier. You know, I find myself cycling through and probably wasting a lot of time when I can just look at one filter and it can tell me all the information I need.
I see you have the tick there, but
Yeah.
are you using the advanced decline line at all?
It's a good point. I personally don't, because I do not get it through Dash Trader, which is the software I use.
Okay.
So it's
I would
not
just
something I've looked into, but I know a lot of guys
okay.
do it.
Yeah, so I think that you can probably get it on TradingView,
Yeah, just pull it up on
or
there.
a Thinkorswim account. You could open up one quick, but this has been really helpful for trend days, because basically what it does is it gives you a line and it shows the number of advancing stocks minus the number of declining stocks.
Mhm.
And just from taking a look at this every day, I have it up with my market internals. You just get to know it when you're looking at it every day. And what you'll notice is that on trend days, you know, like we saw with the cooler CPI, it was pinned above 2000. And I just know from watching this every day that that's very, very rare.
Mhm.
And it was actually pinned at like 2,700, which I don't think I've ever seen. So that was a huge indication to me. Like on a day like today, the advanced decline gapped up, so it'll open up at like 1,500. So there's 1,500 more advancing stocks than declining stocks, right? And then it kind of just moves around, and now we're at like 700. And for most choppy days, it'll look something like this. But on a trend day, when big money is buying stocks, you'll just see it above 2,000, and you'll see it holding above 2,000, and you'll say to yourself, well, just from looking at this every day, this is a rare occurrence. It's not budging; it's stuck up here.
Mhm.
So that is another indicator of really strong buying. Yeah,
And it's kind of breadth, right? I mean, it's market wide. You're seeing it.
That's huge. What he's saying is huge. It's really, really huge. Even on days where there's no catalyst, like what he's saying is huge.
Just having it up, looking at it, understanding what's going on.
Yeah, because every day has its own character to it and nature. And so sometimes it's just as valuable to understand what not to do as understand what to do. And obviously we have a huge catalyst here, and we're talking about like a very big opportunity. So we're very focused on, what to do here and the signs of it. But as we're trading, throughout the days and the weeks, there are a lot of days where, things might look really strong or things might look really weak. And there are characteristics of the market internals, whether it be the tick or the advanced decline or the VOLD reading, which is the volume flowing into the up stocks and the down stocks, that are indicative of a trend day. And it doesn't mean if you're getting these things, you're going to get a trend day, but like pretty much, all trend days have these characteristics, right? So you're not really going to get one without them. And so, so if you have an inclination that it might be a trend day, but these internals are really not confirming that, it's going to, the odds are not in your favor. And so, I mean, Justin just touched on one of them, which is a really powerful one. And I think, there's more. Like you can go further into the internals and find more that will highlight the likelihood of a trend day or not.
Yeah, and I just think, I know this is based on special situations and trend days, but what Garrett is saying is like so key, that you could have a bias and think for whatever reason that the market is going to trend today, it's going to trade up, the pattern in the morning looks really strong. And then you take a look at the tick, the advanced decline, the VOLD ratio, and they're saying something totally different. And that could just keep you out of so much trouble. And it's really powerful when you have an indicator that's telling you not to trade and telling you that your biases or your thesis is probably wrong.
While we're on the subject, I don't want to bog us down too much, but I just think this is so important. And you guys touched on this really well here. You're talking about the tick, right? Because not only did you talk about the very strong 1,000 ticks, but you talked about the negative ticks being shallow. And I think that a lot of times people are focusing like too much on the upticks, say in a strong market, and not enough on the downticks, right? Like they want to see, really positive ticks, or to see weakness, you really want to see a really negative tick. But look, I mean, on a really strong day with strong breadth, a super negative tick is a screaming buy. And on a really weak day with weak breadth, a really positive tick is often a screaming short, right? So just because you get like one outlier tick, it doesn't mean the whole market's going to shift, right? It might be a stop run. It might be, everyone just for a moment, like getting on that side, right? And so one of the things to kind of expand on what you already said about the tick, if you are seeing exactly what you're talking about, which is the ticks are holding above zero and you're getting a lot of strong ticks and they're not really trading below negative 500, like that's all great. But I would add to that, like watch the low ticks. Like look at your tick, mark the bottom of the range. Like there might be 3, 4, 5 ticks that got down to say negative 600. And that seems to be like the outlier tick to the downside. So every time the tick now comes down to that point, watch price and ask yourself, is this holding support still? Is it at a higher low? Has anything changed with the trend or the price action? And if those really negative ticks keep getting bought like immediately, then that's just going to continually confirm to you that you are in a strong market and things are acting as they should if this is going to be a trend day.
Yep, that's awesome.
Since we're talking about the tick and price action relating to the tick, I'm just going to jump in with one more thing. Something really interesting to look at is, for example, we had a news catalyst and the market was very volatile. I'm having trouble remembering which day it was exactly, but we were down like 3% on the day or something like that, and we got a negative 1,500 tick, and like that is super rare. And then the market kind of exhausted, and it bounced, and it went from negative 1,500 to 1,000. And on that bounce, the SPY moved up 2 points, so that's a pretty big move. But later on in the day, we got back towards that low, and we were seeing negative 1,200 ticks. And then the tick went from negative 1,200 back to positive 700, and the market was only able to bounce like 20 cents. And that change in the price action told me that the selling pressure was even stronger. And that like allowed me to put on a short. So it's like little nuances like that.
Yeah, really fine details, eh? Really fine details.
on a trend day like these, those those ticks should be able to be bought. So sometimes that's just a great way to, like Justin just pointed out, a way to put on a trade. Tactically, if you're you have all your information and your thesis and everything's lining up, and then that can be a really great tactic in order to to add to your positions, or or whatever you're trying to do.
When we have a day when a certain sector is in play, and say the market is not overly in play, would you have less weight in the ticker?
That's such an interesting question, and that's really great question. So what you just described is a rotational day. So you might have one sector that's getting bought, you might have others that are getting sold, and typically on a day like that, the market is going to be like I mentioned earlier. Every day has its own sort of nature to it, like its own character, and typically a rotational day is going to be a range day. It's going to be a day where if we sell down into support, maybe we bounce off support. If we rally up into resistance, maybe we come in. It's going to be less clean all day in one direction, typically. And you can go and look at all the sectors to see that kind of rotational day, but you can also look at the tick and see that it is just generally not trending. Like for this trend day, you just described the fact that the tick is generally holding above zero for this trend day, which is a great observation. But you could also look at the tick on a rotational day, and the tick is going to be wide and above zero and below zero and above zero and below zero, and it's going to be messy. And so that in and of itself is going to give you the information that we might be having one of these rotational kind of days, or an inside day, or a range day. And I might want to change my perspective to fading extremes, or not looking for a trend, or just not trading the market. And that might show up in the advanced decline as well. Like you might see that the advanced decline is just inside 500 on either side, which is very benign, right? Like positive 300, like who cares? And the Vold reading, the ratio of volume flowing into the up stocks versus the down stocks is going to be like a 1.3 to 1 or something, again, like something very benign. And so when you look at the internals, like sometimes you just see all these benign readings, and that right there just tells you that we're kind of having like a nothing day, right? And so like we talked about earlier, like if I somehow think that we're going to have a trend day today, if I start seeing that stuff in the internals, like I'm going to have to really check myself and make sure that other things are lining up like so well, because the odds are against me. So yeah, like to answer your question, I would still be looking at the tick, and I'd be gleaning information from it, but that information might just be like what you said. There's one sector that's in play, the rest of the market's not. We're having a rotational day, and I'm going to have to adjust like to that. So I'm always looking at the tick. I might not. So maybe to answer that even more clearly, like on a day like that, yeah, like I'm not going to be analyzing like every tick. You know what I mean? Like I'm not going to be trying to like execute off of high and low ticks, because the type of day it's just not as clear.
The tick, advanced decline, and the Vold ratio, those are three things that never leave my screen. They're just like there permanently. And like if you're looking at the tick and it's like today, it's between negative 600 and 600. The Vold ratio, which gives you a ratio of volume flowing into up stocks versus down stocks based on the prior close, like it's a 1. Like that's just going to tell me that today is a neutral day, and I shouldn't be thinking about, if we break highs, we're going to trend, or if we crack lows, we're going to trend. Sure, it could happen, but it's just telling you that the odds of that are highly unlikely.
3 things there to really focus on to give you a better understanding of just market internals, and then just increase your odds of making a better trade.
Right. And before we move on to the next, I think you chose the wrong people to do this.
We can talk all day about this stuff.
And we have. So
yeah, we have.
Just one more thing. Like I know that when we mentioned the price action in regards to like the tick, just one thing is that you said like, oh, it's very specific. And that's the only reason why it has edge, because it's so specific, and there other people aren't looking at this stuff. That's what gives it edge, right? So it's just something to think about.
Thanks, guys. I appreciate that. I'm definitely going to add that all in. To carry on here, so execution strategy, obviously there's, I think, 3 different execution strategies that we're taught at S&B, and these would be those 3. Just based on what we're looking for, like scalping will present a lot of good opportunities, but it's not necessarily the way you want to go in a market trend day. Move to move, similar. I think there are some really good move to move opportunities, but again, it's not necessarily the way we want to trade this. And the way we want to trade this would more be a sort of trade to hold, managing it on those larger time frames, not the 1-minute chart, so that we're not just affected on crazy candles or so on and so forth, and reacting to that, and just essentially being able to build bigger positions, increasing your upside, keeping your downside the same, and just being able to see different patterns as they evolve, and just slowly add into your position and hold a call to the end of the day. Most of the time, I say this with bated breath, but these trend days, if there really is the strength of the market that we want to see, they will close high of day, and we want to be able to hold as much of a position into that as possible. There are times where they fail, and I think we have to be aware of that, so that we still capture some profit and don't leave it on the table if we get the odd fade at the end of the day, or profit taking, or so on and so forth. But most of the time, our goal would be build trade to hold positions, take profit using moves to move, a percentage of it, but really hold a core for most of the day, and manage this on a 5-minute, 15-minute chart. Any feedback on that?
That's great. I mean, I like how you identified like what is good for you, right? Like there might be a trader that just crushes move to move trades every time they identify a trend day because that's what they do, right? It's not that that those trades aren't there, but I agree with you. You know, I think this is why we're trying to find a massive trend day. This is a trade to hold. So I think that's great. I mean, Jeff and I were talking about this the other day, and we were just kind of laughing about how, and I don't mean to understate the execution of it because it is very important and it is not always easy because you have to find places to buy with good risk reward, and you have to, you know, continually assess the situation and be able to hold. So I'm not downplaying this at all, but Jeff and I were just kind of laughing that it's like 99% of this playbook is identifying this trend day in the first place, right? Because now we know what to do, which is hold. Yeah, exactly. So I just think that, like, you know, the more energy that we all put into identifying the trend day and being able to continually identify it, and so as the morning moves on and as the day moves on, all of these checks are adding to our thesis. The easier the execution part will become. So, you know, I think you nailed it, but that's what I think.
No, I think that's a great point. Though 90% of this is actually identifying the trend day, and then the rest is finding those little pockets to sort of.
And you know, it's not all in the pre-market, right? Like it's at the open, it's in the morning, it's after 10:15, 10:30, it's the midday, and then it's like where we are at 2 o'clock. There are all these checkpoints where, and you're looking at like how these low ticks are getting bought and how the price action's holding up, and I think throughout the day, like sometimes there's certain trades that can be made based on these checks falling in your favor, right? So you have your pre-market idea because there's a catalyst, there's volume, you know, everything lines up to be a potential trend day, and then maybe the open confirms, right? So you're getting long, and then there are some pullbacks, you know, on some deeper ticks that get immediately bought. So you're liking that, right? We're holding above the opening range. You know, there's ways to buy that, and then we get a run in the morning, and then, you know, midday happens and things start to slow down, and maybe we get, you know, a deeper pull in, like on lower volume that doesn't really violate any like uptrend levels, and so now there's like another trade decision, and so you're looking at, you know, okay, the internals are still holding up, like the advanced decline is still pinned to positive 2000, like all of these, you know, we have wide breadth, like the high beta is going, like the beaten down stocks are going. You know, I might want to add on this pull in to position into the close, and so it is a trade to hold, but for me at least, there are like many points of execution like within that, if that makes sense.
So let me ask you this question then, because I think this is something I'm trying to understand myself. Obviously, you have 3 pretty strong indicators to identify a market trade to hold day, right? And a market trend day. What about individual stocks? How do you look at that in thinking, hey, odds are this is a trend day in my favor?
The question is about an individual stock?
Yeah, so looking at market trend days, we obviously have the tick, the advanced decline line, so on and so forth, which really sort of gives us a key into the overall market and the strength of the market, and which leads us to the decision that I'm leaning towards a trade to hold. We have the catalyst with breaking ranges. So how do we extrapolate that and really project that onto an individual stock that has a catalyst, it's breaking a range, and how do we get some extra checks in our favor? Or how would you look at it thinking, I want to be in this for a trade to hold? Is there anything further than just it's an amazing catalyst, sectors are sort of showing strength in its favor, it's breaking out of ranges, the RVOL's there? Is there anything else that you would look at to be able to make that decision?
That's such an awesome question, and I mean, we could do an entire meeting about that question. But yeah, I mean, an individual name with a catalyst and high volume should have independent order flow, right? So in a way, like it should be way stronger than the market, but the market environment matters to these breakout trades, and the group matters, like the sector that it's in. And I think you just mentioned that, right? So I'm still going to be looking at the market on that day because, you know, we have the overall environment. Like, are we in a bear market where breakouts aren't even working, period? Or are we in a bull market where breakouts are working, right? And then you have the current state of the market, right? Like is today strong or not? Are we just, maybe we're having signs of a downtrend day in the overall market where I have in my morning prep, like 2 really good short ideas and 2 really good long ideas. Well, I'm probably going to lean towards looking at those short ideas if I'm seeing that the overall market is lining up for like a downtrend day. So it does help to have that wind at your back, I think, and to be able to identify it. But it's much more of like a nuance to the trade when when I'm trading like a stock with independent order flow. Does that, Justin? Do you agree with that? Does that make sense?
Yeah, definitely. I mean, I think you hit the nail on the head. I don't have much to add there.
Let me ask is it good enough to not necessarily have the market at your back, but not going against you, if that makes sense? So if you have the independent order flow, if you have the breaking ranges, everything's checking the box for you, this could be a trend day to the upside, and the market's just, as you've said, just sideways, not really much going on. We're not, we're not weak. Is that something that we can say, great, the market hasn't really, there's no real factor in the market here. My trade to hold is the probabilities obviously aren't as high as the market's trending up, but it's not going against you, which is a somewhat check in your favor.
Yeah. I mean, if we're in an overall environment where breakouts are working, and if we're in a strong market where breakouts are working and breakouts are working on normal days, then absolutely that's enough. Just because the market's having a quiet day doesn't mean that something with a huge catalyst can't run. I mean, that's absolutely enough, right? And sometimes even these catalysts will go against the market because they have such independent order flow, right? So assessing the catalyst in the RVOL and how independent is this of the market is a question in and of itself, I think, for these individual trades. But for me, it's a bonus if you've got the market with you. But the overall environment really matters, right? And that could just be the kind of week we're having, right? What if CPI just happened, we just got a huge move, now we're getting some follow through, and we feel like we're in a bullish environment right now. Just because the market's having an inside day. Say we saw, stock A break out and run, and then stock B break out and run the next day on a catalyst, and now we're having an inside day, and we have another stock C with a catalyst. Well, the pattern here is that these breakouts are working. So I'm not going to care, that the market's having an inside day. I'd love it to be having an uptrend day, but it's not going to sway me really from looking at it.
So it's actually, it's more not necessarily what the market is doing that particular day, but more market environment and what is the bigger picture here of the market.
Yeah.
Lovely. Thank you. That answers that. Okay, moving on. So these are the trades that we look for. Just again, this is more independent price action patterns that we're looking to get involved. So firstly, this we move down to key support. So this is a trade where we have a 9 out of 10 level. That's our 9 out of 10 or 10 out of 10 level, in that sense that this is a huge daily level. We think there's going to be support or resistance here if we're going short. And it's going to be somewhere that institutions are going to look to defend. It's good price. It coincides with our overall thesis of the day. For this, maybe if we open high, we'd look for some profit taking early on and just sort of to pull into that key support. And this would be one area that we would be interested in buying. For us, entry is going to be as close to the level as possible. Trigger is going to be a change in the tape, either a big bidder, somebody willing there to step there, or maybe a false breakdown and we get a low high trigger against the level, and the bidder steps up from the low high, and you can risk against the low high. So I've put scalp. We've kind of broken this down into how would we look at each of these trades from a scalping perspective, from a move to move perspective, and from a trade to hold perspective. I think ideally, if we were again building this trade to hold thesis, our game plan would be we buy in that level, we've got our trigger, we're going to sell 25% into the top of the range, and then we're going to hold the rest of the trade to hold, risk below. That would be our first sort of pattern here.
Is that an individual stock or what?
Yeah, this is sorry. All of these charts are patterns from day 1 and day 2 of.
That's AMD.
This is AMD. Yeah, sorry.
Yeah, so that was
an A+ level. I thought.
Yeah.
I thought that was a great stock to go to on that day. I thought that the daily range had tightened. There was a failed breakdown, and then a reclaim, and then a breakout of that upper level that you have on your chart was huge. I thought, and I think just finding any way to position yourself for a break of that, especially on a day like this, was a great idea. So that's awesome.
Yeah, so I think we're going to use a few of these. I think AMD's shown a lot here, but so first, move down to key support, 9 out of 10 level. That'd be one way to get involved here. This just be the back through open. So I think this was snow on the day 2. You got the first move down, but you didn't really have a really key support level to buy into, which didn't give us confidence buying against the initial trend. So wait for this. If it's a shallow pull in and we get that push back through opening print, then we get scalp wise, we buy that push through opening print, and we'd get out when the tape stops, move to move. We'd maybe get a move into a level, and then trade to hold, risk below low there, and we're looking just to hold this through as we go here. So entry would be as close to opening print as possible. Trigger would be a clear reversal, clear volume kicking in from the lows, clear change in character, and ideally looking to take 25% as a move to move, and the rest of 75% just hold and build into that bigger trade to hold position.
Right. This is a good example of how you could be looking at that ETF filter, and you see ARC is the strongest thing, and you see that a lot of the beaten down stuff is running, and that can give you more. If you like this level, if you're kind of already looking at snow, maybe that gives you a little confidence that daily charts like this are going today. And for me, and I'd love to hear what Justin thinks, but I see, if I really want to buy this based on obviously the market following through, and then I'm looking at this group and stocks similar are running, so I'm I want to be long snow. If I'm watching it early enough, I really love that VWAP reclaim in the opening range. We have a dip, it's very, very shallow, and then it gets back above, whatever price that is. And then it breaks out and then pulls right back to the opening range, which, happens a lot in the overall market on trend days. And it's just a really great spot to, I think, watch the tick, watch the tape, and just, take a stab that it's going to hold. And that's great. Justin, is that how would you execute this?
Yeah, so there's two trades. There's the back through open, which they just outlined, and then there's the pull into VWAP, and then it continues, right? I actually think, well, for me in my trading, I think the better trade is the pull into VWAP. It holds that high, and then it pushes off. I don't know. I guess that's like 946 or something like that.
Yep.
I really like that trade because the risk reward is really, really defined, and that's an elite risk reward trade because you know exactly where you're wrong, which is the low of that wick below VWAP. Whereas my only issue is with the back through open. That's more of like a time stop, and it's just more of a momentum trade. For me, that's a trade that has to go right away, or I'm cutting size. Whereas the pull into VWAP and then the continuation off VWAP, like, okay, it pulls into VWAP, there's a turn, you know exactly where you're wrong. Like if it fails VWAP again, takes out that low, like you're wrong. And it's just a better trade for me because the risk is defined.
Yeah.
Yeah, I mean that's my thought there.
No, that's useful. I do cover that a bit later on, but I think especially in this case, this looks like such a good opportunity to get involved, as you said, with clear risk reward below that wick. I mean, it's exponentially greater than the back through open trade here.
Well,
sure.
Yeah, that's just hindsight though.
Sure. So, okay, so back through open. This would be the consolidation of VWAP. So this is just a pattern I've noticed over the last year or so. We get this initial sell. It's almost like we're going to get the back through open, but then it offer steps down, holds, we reject, we go back to the lows, and we kind of consolidate, and then eventually we push back above VWAP. We come back, we retest VWAP, and then it's sort of a great trigger to get long for me, and then look for that. Either push back to the highs if we're within a range, but most of the time breaking out highs and really pushing would be that pattern. So again, entry would be as close to that sort of consolidation above VWAP or that break and retest at that level. If we trigger would be a false breakdown of it, lower high against the level for me, risk below the level, risk below the sort of false breakdown wicks. And then again, you've got the scalp move to move, but ideally take 25% probably at the high and then hold the rest of the trade to hold and build that bigger position. Opening range breakout, we just get that opening range, we sink in that initial battle between buyers and sellers. Eventually, in this case, the buyers win, and we're looking to take that momentum drive higher. We get that really clear volume change, just at VWAP here and then the push through. So if we can take a position here, scalp 25% again in momentum, and then maybe leave our trade to hold on, risk below here, risk below this sort of changing character here once we get above VWAP. And look for that larger trend. That would be another way to get involved. Then we get the break and retest. This is the sort of opening range break and retest here on the video. We get that clear consolidation above that opening range level. We see it, we false break a few times. And so again, look for false breakdown, low high against the level, risk below the false breakdown, and look to take 25% out into the high of day and then hold the rest of that bigger trend. Then we have for me, this is, if we get that real strength off the open, this is kind of a pattern that I would look for, which is morning continuation. It's around that 10, 10:30, 10:45 time, and we get that clear sort of 20, 30 minute sideways consolidation. It looks really clean. It's outside of ranges, volume's there, and the bid's just not willing to let the price drop. So we just kind of go sideways as people accumulate it, and then we get that drive higher. For me, I would call that the morning continuation first consolidation. Just it's a shorter consolidation that we're looking for once the stock's broken ranges and we're just holding higher. Obviously, EMAs are trending, everything looks great. We're above VWAP. There's no real levels above that could act as resistance. Trying to take a position as close to the bottom of that consolidation as possible. We are wrong below that consolidation, taking 25% out of momentum and then holding for a bigger trade to hold move. Then we get that midday VWAP retracement. For me, we get that sort of morning push higher. And then around 11 o'clock, it's either a period where we've overextended and we're going to pull back and the bid doesn't want to step up higher and there aren't necessarily funds willing to pay those high prices. So we do pull back to VWAP. It could be a deep pull in, it could be a shallow pull in. We're looking for light volume. For me, my favorite would be the sort of false breakdown. It looks like we're going to sell and then we get back above VWAP. We get that clear lower high against the level. And that's you're taking that long risk below. False breakdown, again, 25% into high of day, holding the rest for the sort of bigger picture trend here. But this VWAP retracement is something I'd look for if we're not getting the next trade, which for me is the second consolidation, which is this bid just willing to step up higher at EMAs. It's willing to just climb. The second consolidation, it's an hour plus, 2 hours, 3 hours. It can be all sorts. It's a lengthy consolidation. Volume is spending time sort of higher above VWAP, willing to step up. You're looking to buy maybe the uptrend of that risk below the lower low on the 5 minute chart, or buy the break and retest if we get a wedge forming or a sort of invert or inclining wedge into a level, we get the break and retest that level once we break and volume kicks in. So that would be a push into the close that we'd be looking for, or later into the afternoon. But that's just a lot of energy built up into that consolidation, and then we get the break out of it and we get a nice big move.
One thing that I'm thinking about here is I'm watching this and I've got a page full of notes based on the conversation already. A lot of them center around the identification of the trend day and then the variations of things that you can look for. And I love what Garrett said about like, essentially you're starting, your default is this is not a trend day, but how are you proven wrong and how quickly can you be proven wrong in that, right? Like I thought that was just so interesting. What I'd love to see, and I know this is not my playbook, so it's Justin and Garrett, your show. What would be super interesting though is a risk allocation with each of these trades. right? You know which trade is best. How much would you be willing to risk with your stop according to each of them, right? And then score them depending on the quality of the trend day. Because you can get some of these even on not market trend days, but an individual stock, right? And what would your allocation look like for that? What would your allocation look like for if it is a trend day in the market? What would it, like you could get into really specific and nuanced approaches, but and I'm not saying to do that, on your first go, but thinking about where this could go and how you could know, okay, in this situation, all right, we're trending with these checks, the vol is this, right? Vol D is this, and the ADD is this, and the tick is this. Okay, these are the things that I'll do in that situation. Here's the risk allocation, right? Yep. Here's the risk allocation early on when I don't really know, but I'm willing to put it on because I know even if I'm risking 20% of my stop in this, it's really like a 5-to-1 risk reward probably if it is a trend day, right? So like thinking through that might be my only looking at these because I think it would be, they're not going to be right. And the expectation isn't that you get it right, but it's that our guidepost for, did I put on the right amount of risk for the trade? And the right amount of risk is going to change as your experience changes.
Yep.
But it's just a starting point, right? And we want to start somewhere. So that would be my only comment. And I'm sorry for jumping in. I'm really excited to hear kind of more into this discussion. But Tahoe, you posted something in the chat and like, if you're trading your strategy, this is the death of your strategy. It's a trending day, right? So, identifying this as much as possible is probably pretty important too. And so your feedback will be good as we work through it. But I have to say, like, I'm loving the conversation. It's not about right and wrong. It's about us learning. And I think that's kind of happening, at least for me here. And I would love to see some risk allocations according to certain strategies. Right? That would be so cool. I don't care if it starts at like 5% of my daily stop, but just start somewhere. And I think with all of our strategies, we should start somewhere and know that wherever we start, we're probably wrong. But we can grow from there. So
I think that's definitely something I need to, Jeff, to be honest. Based on each of these strategies to build in a risk profile and be willing, because I know this is, for me personally, this is one of my A+ setups and trades. Like I love trend days to the upside. Well, that's, M yesterday that's my bread and butter. And I know I need to figure out ways to make money, good money in those trades and make an exponential multiple of what I'm making in a average trade. I mean reversion trade, scalp or something. Like I definitely need to work on that. So I will build that out.
Just like one way, I think not enough people talk about this. You're saying like you want to be bigger on trend days, and that's really great. I think one exercise that could really help you is visualization exercises where you say, okay, this is a second consolidation afternoon, continuation trade, whatever it is, and you visualize where the entry is, where the stop is, how much size you're going to take, and what I think the most important part is like, what does that feel like when it goes against you? Yep. That way you could really accept the risk, and that's the most important part when we're thinking about trend days and making an exponential amount of money than you do on a regular day. Well, okay, that's going to require a lot more risk, and you have to accept that risk. Yep. And that's where like that visualization exercise could really, really help.
And Justin, do you have any specific like resources that you've used for visualization exercises, or is it just you literally take a couple breaths, sit at your desk, and think through the feelings of that trade?
Yeah, I work with Dr. S on this, and that's really all it is. Like you visualize yourself sitting at your desk, taking the trade, what the P&L is going to feel like when I think like, sure, we could always visualize what it looks like when the momentum's ripping in your favor, right? But what does it feel like when it's sluggish, when it's taking a while to work, when it's going against you a little bit? What does it feel like when you think it should work right now, but maybe it's taking a little longer because the market doesn't care what you want? What does that feel like? So like, you got to really go into detail with it. But and just for me,
even for some people, just to jump in, I've noticed like one of the hardest things to do in a trend day is to not take profits.
Yeah.
Right. Because you're like, oh, I'm up so much. This trade's working so well. I should take some off. And it's like, no. Your only thought should be, this is a trend day. How do I get bigger before the close?
Yeah.
It should be risk on. And then if you have the opportunity, even more risk on. And that might be something you need to visualize just as much of seeing your P&L, having the trade work right away because you identified it and then not taking it off, not going into that defensive mindset. Right. So it's almost like, that the reason why I'm saying that, Justin, and not to cut off and not to discount what you said, because I think what you said is absolutely correct, that is the biggest problem most traders have. But I saw a couple traders put up their biggest day in CPI day, like by a long shot, simply by doing the visualization exercise to not take it off too quickly. Right?
Yeah, definitely goes both ways.
It goes both ways, right? So if you're going to do one side of it, make sure you're doing the other side of it too. But it is super interesting. And I love that comment of just like, you feel what it's going to feel like, because otherwise you're going to feel what it's going to feel like. It's going to freak you out. So
yeah, it's good to do that, and like it's just a great way to fully accept the risk that you think you want to put on.
Yeah, so I was trading an M trade yesterday, and there was so many instances that I was like, I want to take this off, but I just got into the mindset of, if I take this off, I'm doing myself a disservice. Like this is an opportunity, and I know if we're playing the game of math and the probabilities, and as we add up over time, this is something that I have to hold. I cannot take this off because I destroy the whole framework of why this works. And so I just put orders in and just said, this is where I think it should go, and this is where my stop is, and I can monitor my stop along the way, but I'm not going to hotkey. I'm not going to try and take anything off. I'm just going to let it sit. And admittedly, I didn't have huge size, but that was just trying how I was thinking through the process.
Yeah, that's great. And sometimes it just helps me. Like if I have the urge to take profits, I kind of just say to myself, like, this is what it looks like when it works perfectly. So why would I take off profits now?
Yeah.
This is what it looks like when it works great.
Yeah, this is That's a great point, Jeff. I mean, this is something I'm working on now, too. Just making sure that I'm risking more on days like this when I identify it. And I think maybe something to consider is that sometimes you're going to identify a trend day like super early on, and sometimes you're going to identify a trend day at 1:30 p.m. And that's okay, right? There's different types of days, there's different flows of information, and we all like to think that if we're going to open at the lows and close at the highs, like of course, like, well, I just want to buy the first minute and just hold all day, and that would have the best risk reward. But that's not always true. Like sometimes we don't have enough information on the first minute. I think the CPI day was very special because we could have a lot to go on very, very early on, and some things that we have yet to even cover in that respect. But for me, I think a big part of it becomes like, okay, like when in this trade did I identify the trend day? And then how did I act after that, right? So it's like, you don't have to get the first minute. You don't have to get the first pullback. It's all about, like, for me, like what defines, okay, now it's a trade to hold. Now I'm playing for the trend day. And because only then can you really do this stuff that we're talking about, which is like not sell and risk more and all this kind of stuff. And so, sometimes I think, perhaps a catalyst isn't as blatant, but there's a tailwind in the market, and we broke out, and the volume's there, and the breadth is there, and the price action's there, and we're sitting there at like 1:30, 2 o'clock with a great setup intraday, and you're saying to yourself, damn, like this is a trend day, like we're gonna close at the highs. And sometimes like that's that can be the trade, and that's kind of like an intraday move, intraday swing, but you're still playing with this concept of a trend day like at that point. And then on a day like CPI, you can find all these places to add, and to kind of, I guess, add to like the charts that you've been putting together here, which I think are really great, and all these patterns are really good. But I think maybe one thing to consider too, like when trading these individual names, especially like the high beta names that tend to follow the market closely, I think there's something to be said for watching the market, like watching the Qs or watching SPY, and seeing that pullback or seeing that setup that you want, and then seeing like which ones of these like high beta names or whatever you want to look at, like which ones are offering great risk reward at this place where I think the whole market is a buy. Like where can I get the best risk reward? It might be in Netflix, it might be in Tesla, it might be in Nvidia or AMD, but maybe you notice that one of these is like particularly strong and it's not pulling back that much, but it's really tight. And so not only can you say to yourself, this is really tight, so my stop's going to be close, but also this is showing relative strength, so the move, if this works, might be much bigger than some other stock. And so when trading a trend day, it's not just all about like the individual patterns of the individual names, but you can kind of add, okay, like how are these patterns like relative, to the setup in the market, if that makes sense.
So when you guys so if you're taking a trade middle of the day, are you basing risk off, say the full day? Like, are you looking at, okay, this is a trend day, I'm going to base risks off the low day, or am I going to base my risk, off a higher low?
It's going to be higher low. It's going to be a tick. It's going to be some previous level. Like I'm not going to risk all the way back down to the low a day. I might actually do that move. Maybe I'll do that move with options, just so that it's a little bit less volatile around the entry price.
Yeah, because I'm thinking like, especially on a day like where we had such a big catalyst on the CPI, normally you would get some follow through into the next day. So and obviously we're talking about intraday and not kind of swing trading, but could there be a possibility to frame a trade in the middle of the day where you're risking off the low a day and looking to swing this into the next day?
Yeah, I think it just all depends on the risk reward profile, right? Like if you think this is a 2-week swing, then and this move is just starting, and that's how you're going to express the trade, then trading it against low days, could make a lot of sense.
But also, Andrew, the thing that's interesting here, and I'm not going to speak for Gary and Justin, is if I see a trend day, I want to be thinking, what are all the trades that I could make? Right? Mm-hmm. It's like saying in the low flow, the backside's in, right? Mm-hmm. What are all the different ways I can get paid that take the pressure off of the buy and hold, right? Or the short and sit tight, or whatever you want to call it, right? Mm-hmm. Like that's what I think the real opportunity comes in is, yes, if you're right and you get the right timing and you get everything right, it's awesome, right? But like if not, what are all the different ways I can get paid in this, right? Can I hold a core against the low of the day, and then can I take all these 3 or 4 other trades that pop up? Can I, take a move to move trade or a scalp trade in something while also trading this other thing this other way, right? Like that's the beauty of a trend day, is we have we have something that should be happening, and if that one thing does happen, we have so many opportunities within that, right? So there is that element of like, I'm going to buy it and stop slow pay. And that's very valid, right? I think there's so much validity in that idea. It's just what you do next with that opportunity that will dictate, is that something where you need to hold it for 2 or 3 days, or something where you can make just as much intraday on day 1 and then on day 2, and then you're selling a core on day 3.
Yeah.
Right. And so like, think about that's like the padding stats sort of trading, right? Like you have, if you're right on the idea, you're really going to get paid, not because you bought at the right time and you're selling at the right time, but because you're being super opportunistic within the entire trade.
That makes sense.
I also think this is where like continually identifying the trend day, like I can't emphasize that enough, right? It's not just like a 931 thing where you're like, all right, it's a trend day, and then, and then you're just glued to the tape. It's like, you're continually assessing that aspect of the trade. And so when we're above VWAP and we've made a move, and the breadth is the way it is, and all the stocks are trading in unison, all the sectors are trading in unison, there's elevated volume, we have our catalyst, everything's acting like a trend day, something's going to have to dramatically change for price to just completely roll over and trade back to the lows. And like a lot of the times I'll look back on these trend days and I'll be like, God, I didn't even take any heat like on these trades. Like I barely drew down today. I could have been risking so much more. And there's a serious wind at your back when you're trading these days. And in a way, it should kind of feel that way. So when you're kind of looking at that midday pull-in, and if that is something you want to buy, like kind of going back like to your question, I mean, I think there are ways to get some edge in that trade between looking at the tape and looking at the tick and previous price levels and areas where you don't think it should trade below. But in order for price to really start to roll over, like the tick is going to have to change. Like it's going to have to start shifting and trending and holding below 0. And that's not really what happens on a trend day, right? And if it does happen, there's usually maybe like one moment where that happens, and it might last for 10 minutes. And if that move doesn't take out any meaningful price levels, like as soon as tick reclaims and it looks like that selling is over, like, I mean, a lot of the times, and this definitely happened on the CPI day, like a lot of the times that's it, like the selling's over. And so it becomes like a valid place to consider an ad or a spot to execute. And maybe you have to try a couple times. But on a day like this, for me, like it's worth it. It's worth getting in there and like getting my hands dirty versus just any old day where I'm, trying to buy something like a million times. Like it's a different mindset.
Yeah. I find that is the hardest trade on these days, is finding the spots to add.
Yeah. Yeah, I think it takes a lot of patience, like that midday trade sometimes. For me, at least, like I have to tell myself, okay, like, we're trading on a little bit of a higher time frame now, so I've got to be a little bit more patient. I have to be looser. I have to be willing to, and then every once in a while, you might find like a really great spot, right? Like it doesn't always happen, but like what if price develops sort of a midday like support level, enough time goes by, it's been holding it, it comes back into it, it dips below on a really low tick, and just immediately gets bought up and reclaims on a higher volume bar, right? Like now you're looking at the tape realizing, I'm trading the Qs. I might only be, 10, 20 cents from this wick, but I'm seeing like a lot of edge in this spot because not only am I at a support level, but it just actually flushed it and reclaimed, and there's volume coming into the upside, and that was a super low tick. And there's a lot of things about this that are telling me that like on a trend day, like this should be protected somewhat, and if you're wrong, then you're wrong, like, hit out or whatever. But
I think that shop chart that Harry has up identifies exactly what you're talking about. If you look,
This one?
no,
Is that-
the one that you have up on the slide. So right where you have the arrow, I think that's exactly what happened in shop. We broke below, and then we had some volume come in. We bid right back up and had some volume come back in. So like that looks like a great spot where you would think about adding there at 1 o'clock.
Yeah. That's great.
Yeah, Garrett, this was Apple. This is actually the trade I took on this day on CPI day, and we kind of got that. And this is kind of where I got along after we saw this, and then we saw this again. And then this is what I was thinking was, okay, this is a good level to defend now. Below view up, this is kind of where I want to sit. It might take all day, and then we got that into close.
yeah, it's weird. That had such a great move into the close.
Yeah, and the imbalance.
The imbalance was pretty high on that.
That's right. Yeah.
So yeah, they're the kind of the ideas, and then these are just the examples of just how we would think about trading this. I can go through them real quick, but AMD, the standing, like you get that move down in support, look at that turn, 25% out at the highs, continue, add a bit more to that opening range breakout, cut to move to move, and then sort of midday, you get that false breakdown to view up through the EMAs, get back above, hold a volume, and then sort of another good point to add, take a little bit more out into the highs, and then essentially hold for that longer move, and then you get that break and retest of the high of day, add in there, and then hold into close, really. So that would be day 1. Day 2, again, we get pushed down into yesterday's spot level, really good level, going to change the character, can get long there, risk below, cut 25% of the move, then we get the break and retest of the opening range, into view up, add a bit more there, take a bit more out on that extension, and then sort of hold the rest. We get that view up retracement, we struggle to make a low compared to the 1045 low. Get long a bit more there. Then we get the break and retest the half day, and a bit more there, and kind of look until, for me, the sort of break of the trend would be a new 5-minute low below the 20 EMA. That's just how I'm looking at this as my failure point, or my exit point, if you like, of the whole position of this trade to hold. So in this case, I'd have got out at 3 o'clock, essentially, once I made a new low below that 20 EMA. And then on the short side, this was just one that we had up that I just had. Same thing, but short side. You get first move up into resistance. You can short a bit there, take a bit of profit, 25%, add on the breakdown, opening range breakout. Then you get the break and retest, which is also VWAP retracement, good confluence of the two levels. Short there, take a bit out. Then you get the first consolidation against the EMAs. Everything looks great, trending. Then you get the second consolidation, sort of an hour plus consolidation, still trending. And then you eventually get out once you get that new high on a 5-minute chart above the 20 EMA. That's how I would trade it.
Do you guys have a slide of a chart of like the Qs, for instance, on the CPI day?
While you're doing that, I just want to touch on something that Andrew mentioned before regarding like, could you buy the pull-in with a stop at low of day? That reminded me of something that I used to do. And that's where a situation for me where I feel like I don't make enough money in the morning and I'm clawing or reaching for setups in the afternoon to make up for that. And one way around that is asking yourself, is this trade comparable to the trades that I took in the morning? Meaning like, is this trade better or worse? And if the trade is worse, what you can't do is risk up that afternoon trade more than you did in the morning. And I think that's where you kind of have to accept defeat to some extent and go take a walk. You kind of have to constantly be asking yourself, if I took this trade, what would I tag it in trader view? Or is this a playbook trade for me? And if it's not, then you can't put on like more than 5% of your stop, right? Does that make sense?
Yeah, that's exactly why I asked the question, because I see a lot of times on these days I look back and I go, wow, man, I missed so much of that move, or I took it off too early,
make it up on
so I compensate, and I'm risking too much, and then it goes a little bit lower than I think it should, and I'm like stuck in between. And
yeah, that's a really dangerous game to play. You don't want to play that game at all. You just want to accept the fact that, hey, there was a great opportunity this morning. I didn't trade it well enough. I'm going to go back and review and really study these setups. And that's going to be like my revenge.
Yeah.
Like, it can't be, I'm going to buy this pullback and risk to low of day. Because number one, like, did you study that? Is that a trade that you've made in the past and had success with? And if it's not, then like, you can't risk more than like 1-2% of your stop on that.
Yeah,
that's a great point. And just to be clear, I'm not risking the low day on a trend day like that, like at 2 o'clock.
Right, because I'm so sorry to cut you off here.
Yeah, you don't want it to come back to that price.
No, like when I was saying that I would, when you asked like, would it be valid ever to risk a low day? The only reason I said yes was because there are swing trades where maybe that's how you would execute it. You'd be buying against low of day, hoping to hold for multiple days. And I know people who do this, including myself occasionally, that where it's a real trade. But we're talking about a trend day, right? We're not talking about a trend month. So for me, I'm not risking the low day there. That's just, there's not enough risk reward. I'm expecting it to hold. I mean, it should go higher. We think it's going to close at the highs, right? So that's why we're putting this trade on.
Yeah, the risk reward isn't there.
That trade is not going to work way before it gets to low day.
Yep.
This is Q's, Garrett.
Oh, great. Do you have the? Could you just show like day one and with the pre-market?
Yep. So pre-market here. Oh, do you just want day one? Sorry.
Yeah, just day one pre-market, and if there's any way to like, sort of, I don't know if you can shade where the regular trading hour starts or not, but if not, that's fine.
No, it is. It's really faint. I apologize. So can you see? Are you able to see the difference in that?
Yeah, you can see with the volume. All right, so I just want to highlight a couple like price action things that happened here early on that are very indicative of a trend day, and then also like when you have news that hits in the pre-market, and I mean I know everyone was expecting this economic number, but obviously the fact that it was weaker than expected was the catalyst, right? So at 8:30 we get that big move. And sometimes, if you're looking at an individual stock, this might be the earnings announcement, or there might be breaking news intraday. I think you can kind of just think about this. Is that when that news hits and you get the volume in that candle, like there's a reaction high, right? And that's at, if you could put your cursor up there, right there, right? And if this is going to be a trend day, I think that this should really be taking out this reaction high like pretty early on, at least in the morning session, right? Like if it doesn't, then we need to kind of ask ourselves why. And so if it's going to be a trend day, like I personally, I want to see it take out this reaction high, and this did it right away. So now, the market's opening and I'm already thinking, okay, like that's a check. Like the market hasn't even opened and now we're holding above the reaction high. And the market opens and we kind of mess around a little bit. And like, what do? We pull right back into that reaction high level and hold. And I don't know what the tick looked like right there, but that's what I'd be watching. And then boom, we get bought right back up. that's another check in my favor for a trend day. This is like the price action of a trend day that I'm liking. Like when I'm seeing this, it gets bought right back up and it takes out the opening range, and it's a small opening range. What is this? A 15-minute, 5-minute chart? So it's like, I guess 20 minutes or something. And it takes out that opening range, and you put a line now kind of up at the top of the bodies of the candles where it took out, and you could even just put it where the bodies are, like down a little bit. See where, yeah, like right there. Takes out that opening range, trades higher, and then comes right back in, pulls in again, and I don't know what the tick looked like right there, but I'd be watching it, and boom, we get bought up again, and we hold the opening range. And now I'm thinking, like, God, like, you know, Garrett, like, if you don't think it's a trend day yet, like, you're gonna miss the whole damn thing, because that's the price action that, like, I love to see that. I mean, on the upside, on the downside, I mean, if there's no specific news, even, I think sometimes, like, just looking at that overnight high, overnight low, in order to look for a trend day, like, we should be taking out the overnight low, right? Like, if we haven't done that by 2 o'clock, you know, I don't know, like, I mean, I guess the futures traders, you know, were, you know, whatever they thought in the pre-market, you know, hasn't changed. And so I'm looking at the overnight low, the overnight high, or even more importantly, the reaction low, the reaction high, and then I'm looking at that opening range, and I want that to hold. And those are two checks that I think that you can get, like, pretty early on in the day, because obviously with this kind of stuff, like, the earlier the better. And so if I'm watching the overall market and I see these things in combination with everything else you guys talked about and we talked about, then, you know, maybe going in and looking at some of those high beta names or trading the Qs, you know, that's probably, like, one of the ways I'd be approaching it.
Yeah, that's great. That makes a lot of sense. I mean, yeah, I would have been, it's funny, isn't it? I would have been probably scared by that, but then once you see that rebid, this for me would then be a great point. So actually, the way you're talking about it's making me think maybe I can just hold on a little bit longer and not necessarily be so skittish when I see things like that.
Yeah, I mean, you know, there's obviously, like, a lot of nuance to the tape, and it doesn't always, like, feel easy. I mean, in hindsight, I mean, we're just Monday morning quarterbacking here, but, like, even if you're not taking those trades, I think that just, you know, what I'm really talking about is the information, because you're trying to, like, stack up information to say, like, is it a trend day? I think so. Is it a trend day? Probably. Is it a trend day? Like, yeah, I really think so. Okay, is it a trend day? Like, well, I've never seen anything more probable than this, you know, like, and so your confidence based on the information grows, and, like, the quicker and more correctly that can grow, then the more edge you're able to kind of capture, you know, and use your trading skills to then, like, capitalize on this, right? Because you might have unbelievable trading skills, but, like, if you're not identifying that early on, like, it doesn't really matter, because you're not even looking to, like, do those things that you're capable of doing, because you're unsure. And so I'm just talking about getting information quickly, right? So maybe your trade comes a little bit later, you know, I don't know, but I think I think just that information, you know, can be really good, because we just started holding levels, like, immediately on this day. And again, like, I try to keep in my mind, I'm like, well, if this is a trend day, we should be opening at the lows and closing at the highs. So with that said, if I'm seeing this kind of price action early on, I'm thinking, okay, well, you know, we should still be pretty close to the lows. You know, it might be hard to visualize how we're going to go much higher from here, given, you know, what just happened, but the evidence is here, so we should probably find our way higher.
Let me ask just regards to stop and adjusting and moving our stop as this happens. So if I guess, let me just go through how I think, and then correct me when I'm wrong. But I would think if I'm in here, then my stop is low of day. Once this gets put in and we sort of see this low high, my stop is probably here. And then I think once we're up here, my stop's probably coming under here, under view up. And then I think once we're seeing sort of this consolidation and the breakout again, I think I'm moving my stop up to here. Would you agree with that? This is hard stop, as, you know, because if this rolls over and makes a new low below here, I personally wouldn't want to see that. And I'm wondering how you would just sort of use a moving stop here.
I like those stops a lot.
Okay, good.
Yeah, I think on a trade to hold, I think those are great stops for those trades. You know, like, it depends. It depends if you're talking about one sort of trade to hold position, I think, or if you're talking about, like, individual ads with, like, tighter risk.
So can I use an example? It's an individual stock, but it's the same kind of context, which is yesterday on M. And so I was long this, and ultimately I stopped out. There's a held offer here, and I took most of my position here. And then once we pull back here, I had my hard stop down here. And I mean, in hindsight, we obviously then got, this was the key level. We then got this and the close high of day, but I struggled to hold my remaining core after the market was fading. After, you know, we got this move from a held offer, I thought I was warranted to have my hard stop on the remaining quarter of my position once I saw the held offer here. What would you guys think in this situation? And I was thinking this last core is a trade to hold.
What was your trade? Like, where
so
was
this
the
is
setup?
Yeah, so this is I mean, this was a gap above ranges. I'm correct in saying what was the key? That was a key level. I think it was down here. Essentially, it was gap and go, trade to hold, raise guidance, breaking, catalyst. For me, I was long in here, added to this VWAP retracement, got a bit longer when we saw that, and then started cutting here, cut a bit here on this initial move, added, cut, added a bit more, cut, and then that last position, which was the trade to hold into the close, and maybe I was thinking we could get 23 based on that being a 2 ATR move. I just didn't want to see it back below this level, essentially, was my thought on that initial trade.
I think and I mean I really want to hear what Justin has to say on this, but I'll just first say what I'm thinking. I think if I were buying that breakout, I would have a tighter stop. Yeah, like, you know what I mean? Like, because to me that's a momentum trade. Like, I want to see it go higher. I might even be scaling into that, and then yeah, like I'll be raising my stop somewhere pretty tight. But if I'm involved in a trade to hold, that's not going to be my stop. Like, I don't see that price as a meaningful swing in the market. Like, yeah, price did hold there for a while. So like, if you're basing your trade off of that, and making that momentum trade, then it makes sense to me. But like, if you're long from the morning and you think it's going to close at the highs, and therefore it's a bit of a higher time frame trade, I don't think there's any real like swing there to kind of like lean against, if that makes sense. And it's above VWAP, and you have to expect things to be able to kind of pull back to VWAP. And, if anything, I would put it below that previous swing there. If anything, that's, where you can kind of see how it like took out the highs and then kind of came back and retested, and now it's going higher. Like that level somewhere in there. What do you think, Justin?
Well, I have two big thoughts here. One thought is, the EMAs are working really well, as they should on the trend day. It's holding the 20, well, you said use a 20, 21 something. So when it breaks there, and maybe even more importantly, it can't get above, we're looking at a 5 minute, so it can't get above 22.70 for 50 minutes. I can't ignore that because I think it's going to go to 23. Like, I have to sell. I mean, I have to sell a lot of it, maybe like half of it there. And then that break below the 20 after that offer's there for an hour, that's enough for me to just take the whole thing off.
Okay, that's good to know. Because I think in hindsight, I look back and I said, based on my rules, I should have cut the position there.
Yeah, for
I
sure.
took 3/4 here once I saw.
Oh, that's great.
But then it was just the remaining quarter, that sort of trade to hold lot, that I was like, this has failed to me, so I should have been cutting it. Instead, I had my stop here. But then I was just wanted to ask, like, on that trade to hold lot, is that even a warranted stop? Is that a warranted stop, or is something down here a warranted stop?
I think you managed it really well. I'm glad that you sold up at that 22.70, and I'm glad you cut it when it closed below the 20 EMA for the first time all day. But with that, I do this all the time as well. Like, I want to keep, like, if I have a trade that's working really, really well, I want to keep like 20% of it just to see what happens. But your stop on it was wrong. In my opinion, if you're going to have that 20% that you're going to hold all day, my reason to sell that would be if it starts holding below VWAP. Like, that's usually the reason to sell that last little lot.
Yeah, that's a great point. I agree with that 100%.
Do you, so I guess I came up with these rules for myself, which is this kind of 20 EMA break, because I just thought so many times, once that happens, or once the pullback is here, then maybe the best price I feel like I'm getting here is going to be that by the end of the day. And really to hold through that just to get, the difference here of 20 cents, 25 cents, is it worth it, is my thought.
Something else to think about is if you're playing, well, the last hour and the first hour of the day are technically the most active, right? Where the most volume is being done. Something that I like to think about is that 22.70 offer, like, that is actually a good short setup for anyone that wants to short this, right? And then they get confirmation of that. So something that I would actually think about is coming into the end of the day, like, if we hold VWAP and get momentum through 22.70, there should be some shorts that are going to get blown out, which is going to offer a good momentum trade. So I like to think about the psychology of the people on the other side of the trade and like how that might play a part.
The idea behind this trade is essentially a continuation after all-time high earnings beat. And over the past couple of weeks, we really saw XLC, specifically the social media names, really overperform or outperform. And names like Twitter were pushing prices they hadn't seen since 2015. And Snap just had a massive earnings beat as well a few days prior that trended for multiple days. Not to mention, in their earnings report, Pins mentioned that they were benefiting from the recent social media boycotts. And so that just kind of added to our idea as to why we thought this could really trend. So the context behind this trade is that we're looking for a triple beat earnings, which is a beat on EPS, revenue, and in this case, Pinterest, we're looking at user growth. As well as we're looking if they release full guidance. It's a positive, but not necessarily a make or break for us. We're more so looking at the reaction. And also we're looking for something that holds 25% of its gap. So like from after hours and pre-market. For our reasons to sell, we were looking for a change in character on tape. So essentially with this trade, we want to see buyers really willing to step up, right? Because if we're looking for 2.5, 3 ATR, like if buyers aren't constantly looking to take prices higher. And another thing we're looking for is a low volume buying as we move higher and sellers beginning to take control. So each move higher, we're really weighing, like, relatively, is buying volume still there? Just following that same idea of if we're looking for so much, we need to see that buyers are really involved. Again, going off the same idea, a breakout in trend over pre-market range followed by a break lower. So we want to see buyers able to take us over that pre-market range rather quickly and defend it, right? If it's going to establish a new range and trend, there's a very low likelihood that's going to happen after it, say, like spends 30, 45 minutes inside like opening range and breaks low day multiple times. After it's broken and moved higher, we're also looking for a lower high. So this isn't necessarily a reason for us to flatten the entire position, but it's an indication to cut size. Specifically, we're looking for the 5-minute and 10-minute and 15. If a lower high is coming in those timeframes, for us, we cut like a quarter to a third of whatever we're holding at the time. So going into Pinterest's earnings report itself, EPS, it reported 0.13 versus 0.03, revenue 443 million versus the 383.5 million expected, and daily active user growth at 442 million versus the 436.3 expected. Also, they announced that they expected fourth quarter revenue to grow by 60% year over year, so the guidance was there as well. And in terms of fundamentals, one thing we're really paying attention to is that ATR, that 2.61, because that's the cause for where we expect like a turn to happen and our price targets as well.
Yeah, so now that we've gone through the variables and a little bit about the fundamentals, I'm going to dive into the stats behind the idea and the specific trade. So with this idea, we've been collecting average stats for this very specific criteria and context, and those stats are in the form of ATR, like Brian just mentioned. On these stats, we want to collect high day from open, low day from open, the average intraday move, and the average ATR gap up. These we can use as comparisons for future contexts that are similar to this, and because of these stats, we were able to have a full PT of about 3 ATR for our predetermined core. And just briefly going over the outcome of pins, the gap up was greater than average. There was also a 2x implied beat, and that's similar to what Brian mentioned earlier, where it's not a requirement of the setup, but when you get a 2x to 3x implied beat, it's a big check mark in your favor. And
when you say you have a full PT of roughly 3 ATR, what do you mean by that, and how did you determine that?
That 3 ATR will come from, let's say price moves down 1 ATR or half an ATR in the open, we're looking for 3 ATR from that low of day, because on average, for these specific contexts, our average low of day tells us that it'll pull in roughly half an ATR. Your average high of day is about just over 2.5 ATR from the open, and the average combined intraday move, if you include the low of day, is over 3 ATR. So for us to get most of our predetermined core off in front of 3 ATR is a reasonable price target for this idea. Obviously, it could shoot higher, but that's what we aimed for.
Yeah, and what are you doing to come up with these stats?
We've been tracking earnings that fit this criteria, and we've been just collecting data and just updating it and creating averages. That way we have stats to back our ideas now.
You doing this in Excel or?
Oh yeah, sorry, this is an Excel sheet. Right, so the implied beat, that was a big check mark in our favor. That can sometimes make the difference between an A and an A plus trade. And then the results, high of day made it about 70% of the way there. Low of day was very tight. It barely pulled into the open. And the intraday move was about 60% of that target. So this is the all-time high context. This shows prices from IPO date. And obviously we're already at all-time highs before this, so we got an even bigger gap coming into earnings. And this is the after hours and pre-market context. Like Brian mentioned earlier, we want to see price hold up in the top 25% of the range, right? This is a pretty massive gap up, an over 6.5 ATR gap up, and for it to hold within the top 25% into the open indicates a lot of pressure, buying pressure, and that will usually lead to price discovery or price testing higher. And that's all we need to know for that specific piece of information. So just a few things I want to highlight right here before I go to the next slide. Price opens right above 64. 63.5 is right here, and then this dash line is our make or break for the most aggressive context on the idea. So 63 to 62.8 roughly was about half an ATR from that opening price. So now I'm going to go into the scenarios that we were willing to take, because at the end of the day, all we've shown so far is an idea, and we needed like a playbook setup within this idea to take and manage our risk on. And so what we like to do is we plan out scenarios within the most aggressive context where we can get our size on and we can manage this effectively. So we had three scenarios we were planning on taking on this most aggressive context into the open. The first one is the one that was backed by stats. The pull into 62.8, 63 coincided with a half an ATR. So that would be a great make or break point for us to take. This is just a classic pull-in trade. And if we go back to the price action here, you'll see that if price pulled in here, when we get these pull-in trades with very light volume on the open, we tend to perform at our best with this specific playbook setup because price will often pull in and quickly turn through the open, which allows us to have really good prices. And from here, we're in a position where we can just see if price is going to hold and accept higher. And if so, we can add and have our average still be somewhere at the bottom and middle of the opening range. So like Brian mentioned, if we can quickly get above pre-market high and hold, we have a great average for our trend, for the trend in our core. So that was our top setup, our most aggressive setup that we wanted on the open. And two other setups that we also had planned out because we know that like if we don't get our most aggressive setup and it's still an idea, we still want to be involved. Since price did open right above 64, there's a chance that price pulls in that 64, it holds. And then for this trade, it's very tape based. We look for a turn on tape, offers to lift, that way we can risk that 64 inflection. And then the last scenario that aligned with this most aggressive context would be the failed breakdown. So let's say that you did have that 64 hold on the open, and then price moves away from 64, it comes back, then breaks down under 64, but there's just clearly no selling under 64. This will often lead to a failed breakdown because when price quickly reclaims that opening bid that it failed to sell underneath, price will tend to like move higher and test higher from there. And so that would be our last scenario that we would want to get involved in, because if price does sell underneath that opening low and that make or break point, we no longer think it's the most aggressive context to be trading.
Yeah, guys, this is really good. This is a really good example of being very specific about what you're looking for. This is a really good example of taking an idea and turning it into a professional trading opportunity.
So like I mentioned earlier, Snap was one thing we were really looking at. This is something that Joe and Igor presented a week ago, but essentially I actually took this trade and it went to that full PT of 3 ATR. And so this is just adding confidence to why we think Pinterest can really go, as like it's the same industry, we're seeing very similar stats, and the pre-market and after hours are showing a very similar range. So 15 minutes into the open, this is when Pinterest has held that 64 level a few minutes in, broken lower, reclaimed, and now broken over that 65, 66 inflection and held over pre-market range. And so during this time, when price holds at 64, we enter on to about 2/3 size, risking that held bid. Once that drops, we head out and are waiting for now a change of tape. Once we see 65 break back over and confirm, we enter starter size again and add full once we see the turn and buyers defend that 66 over that pre-market range. And so right now, I want to talk about the plan versus how we manage expectations. So like I said real quick, the plan going in was that 64 bid holding, wanting to hit in 60 to 70% of our full size, and final add on tape confirmation as price skip as we break over 65. Now, that most aggressive scenario didn't play out. And so at this point, we knew we had to adjust our plan. Once that 64 broke and held, however, or broke down and reclaimed, now we're looking for two scenarios. Either that change in tape on high volume buying, which is the one we actually got, or a breakdown to that bottom end of that range, closer to 63. Like Dylan mentioned earlier, because this is an A idea, we still want to get in just because like the most aggressive scenario doesn't necessarily play out, doesn't mean we want to miss the entire move. So our thoughts after the 15 minutes is, at this point, we were already sized in because we've seen the confirmation of the idea and that strong break and hold of that pre-market high. This coincides with about 1 ATR from the open as well, so we're looking to see our buyers able to hold this. Now that price has moved away from that pre-market high and is now holding higher, we have a great average to manage our position on the idea. Our goal isn't necessarily to continue adding into each consolidation or setup that comes. It's to manage and the ability to not micromanage the position as we progress higher into like 1.5, 2 ATR, and so forth.
Yeah, so now we're going to go 30 minutes off the open. From here, our point of confirmation was this: how quickly we can break pre-market high and hold. And so we got that, and then price started flagging right underneath 2 ATR. And for us, this is just super bullish because at this point, we're not going to try to add into each of these flags or consolidations, but we really want to see how aggressive can trend continue. And the way we're monitoring that is the higher timeframes and volume. How is volume looking at each leg, and how is volume looking on each pullback relatively to each consolidation? Because you want to see it dry up in those periods. I wouldn't want to see higher volume selling on each pullback. And so that's what we got. We got to move into 69, 2 ATR, which is roughly 2/3 of our price target. You can see 3 ATRs, about 71.5, which is what we were aiming for. And then at this point, we were in the driver's seat of our trade. We were still seeing volume come in the buy side, and we're just monitoring trend. Because at this point, real time, we were just making distinctions of what could get us out of our position, what could like surprise us. That's what we're just talking through real time. And one thing we did notice is that with each high of day made, there were still shorts entering, right? It wasn't clean breakouts when price was able to reach that all-time high. You would see sellers step in, we would break back down, and then hold, and then we'd move higher. And so for us, that doesn't tell us to sell anything, but it just shows us how we should manage our expectations on this trade. Because if they're willing to short at 67, which is already an all-time high, they're probably willing to short at 68 and 69 as well. So that just tells us that if we were banking on a high velocity short squeeze before, we can't now, because if we do bank on that, we'd mismanage this trade. And at this point, we're not focused on what playbook setups to take. We're focused on how can we monitor trend and stay in the driver's seat of this trade.
So now this is Pinterest an hour after the open. So the most aggressive scenario didn't necessarily play out. We see a bit of a change in character as we pull back into VWAP. This isn't necessarily alarming yet, but we're wanting to see what is it going to do now. As price stays around VWAP for a while, we see a bounce, and then this is the change in character where bids are now no longer able to hold prices higher and sellers step lower. Once we're able to then break under that VWAP, we see this as a clear change in character, and the change in tape was really clear as well. Also, as you can see on the move higher, there's really no buying volume as well, so that goes into our reasons to sell. Like I mentioned, we were looking for that bounce, and as long as volume didn't necessarily pick up on the sell side, or significant time wasn't spent at these levels or at closer to 66, we're planning to hold the majority of our position for still that 3 ATR mark. However, once we saw that those reasons to sell come, once we saw the change in character, we realized that now the likelihood of that full price target coming is really low. And so we cut about, so for me, I cut about 1/3 of my position, and we were looking for now, how do we react to that 66, that top end of that pre-market high range? If buyers are not able to defend that, that's our absolute make or break point. And that's where we think the idea is shot.
Yeah, we're going to run through a few moments on tape that we think were very, very crucial to this trade. The first one is going to be one of the playbook setups that we just mentioned, which was the opening hold. And then the next one is going to be the failed breakdown. Like Brian mentioned, even though we took that first hold of 64, that one didn't play, and our next playbook setup of the failed breakdown played. So here you're going to see it opens, 64 pulls in. Tape is still speeding up here. You see pretty, like on the open, there's a lot of volume being done, and so the fact that we haven't broken 64 right on the open here was a great sign of information for us. So that's just a really good RR point for us to hit the idea in. And so that happened. Price started moving away, which is what we want to see. Because at this point, we just try to see where can we get positioned, and then we're going to react later to how price can test higher. Got an influx of volume there. Price will keep moving, testing higher. And it actually makes a pretty it throws out a very, very deep wick higher, and then it comes back. So that's a piece of information for us. The fact that sellers stepped down up there But from here, we're not going to micromanage it. We're still watching that opening bid at 64. Price comes back. And we start to hold it again, right? This is what I was talking about when 64 holds multiple times in the open. It's a big inflection, and we're willing to risk off of it. And then from here, price will actually move higher again for a second, and then it'll fail. So I'm going to go to when it does fail. Here, the bids drop. 63.80 flashes on the tape, but clearly under 64, it was not sold. Because if it was sold underneath the opening bid, that should quickly move to 63.5 and 63. But it was even faster to reclaim and pop to new prices higher than 65. So once we saw that, that was a large failed breakdown in our minds, and so that was the moment where we hit in our speculative feeler size. Because at that point, we want to see, can price now hold over 65.5 and at 66? And that's exactly what happened to play out. Because at this point, we want to make sure that we can get into prices where our average is still within this opening range. Because if our point of confirmation is up at 66, 66.5, we don't want to have our full size at like 67. That would just put us in a hard position in terms of managing risk and being comfortable in the trade.
Right, exactly. And at this point here, we're just looking for, can 66 hold? Are buyers stepping up, right? We've seen the confirmation, that change in tape, like Dylan mentioned. We see that buyers were definitely active inside of opening range, but here's the turn that we were looking for. All right, so we break back under 66. How aggressively is it being sold? And as you can tell, not really at all, right? We're slowly moving lower, and it doesn't seem like bids are really dropping at a fast rate at all. We're holding top end of the range.
Volume's also very, very light on smaller time frames on this pull-in, which is something that we love to see when we get a strong break higher.
So this is where we see it start to pick up again. And right about here, I believe, is when we get over 66. And so to us, that's that turn, that's that confirmation. And now we're looking for, can 66 continue to hold, and can we push higher? We want to see that high of day broken relatively quickly. I think that does happen in a few minutes here.
When price struggled to pull in and pulled in very slowly right there, and then it's so easy for it to skip prices higher, it tells us there's still a lot of buying pressure higher.
Mm-hmm. And then right about here is when we break high day.
So I'm going to go into my trade management. Obviously, we did take the cut in the open on 64. It in speculative size, risking a hold back and break back into the bottom end of this range. I took off about half just to cover my risk and cover some of this loss down here. And then once we did confirm, I ended up just putting on my full size here. Because in my mind, that was a very strong tape turn when we pulled into 65.50 and we were immediately bought up. Because I'm a smaller time frame trader, so I like to get my risk on in like one of these spots, and I got my risk off fairly quickly. That way I can get down to my manageable core. Then I added 10% here, just because I know the way I like to manage these positions is I like to pay myself in moves higher. So I realized that with my average, I can still add a little bit and give myself room to take off more sales when price moves higher. That's what I did here. And then when we came into just under 2 ATR, the flag that I mentioned, I ended up just taking more off, realizing that the price could sell out here, and this was just a good spot to take off some risk. And then once we failed to bounce, got sold under view up, I took off half of my remaining core, and then tape really did change here when sellers stepped down. I just flattened, got out of the position, realizing that even though we were so convicted into this idea and our target was 3 ATRs, we felt it, we were very excited about it real time. We understood we had to adjust our expectations, and we weren't going to let this destroy us on the day.
Dylan and I do trade a little differently. I am more of a higher time frame trader, so I like to be in the driver's seat and kind of just stay in the driver's seat at that point. So we took the morning cash flow, took a little bit off into the highs, and got out for a small winner there. Really nothing. And then as we saw that turn and that change in tape, I took 2/3 of my position seeing the 65 tape accelerate. And once we got over the pre-market high, held for an extended period of time and pulled back into right under that, once 67 held, I entered. That is a bit of a mistake for me. I think I should have been entering into that 66 turn that we were talking about. But those opening range breaks and hold, like breakouts and holds of a new range is something I'm definitely still working on. So I cut a bit of the position, a bit of that ad as we broke under that range. Again, like I think that's a mistake, something I'm working on.
One thing that I'm curious to hear your feedback about is, so you were looking to get 3 ATR.
Yeah.
What about time though? So, something gets to 2 ATR really fast and much faster than you expected something to get to 3 ATR. Does that breed a trade decision?
Yeah.
Is it not just the ATR, which is movement, but is it also time?
No, definitely. One thing we're really looking at is at those levels, like how are we reacting right after that? Are buyers aggressively stepping up, or is it just shorts being squeezed out? Because if we're wanting to see that 3 ATR, right, we really want to see like buyers continually stepping up and building range, building value, and moving higher. If we see like a snap, like say a 2-point snap, like higher, I would probably take a little more off into that, and then at that point watch how we're reacting. Because we've seen a lot of times where we throw in like a deep wick higher, and like buyers fail to hold that price, and then a quick 1-point, 2-point drop after that.
Mm-hmm. Yeah, and with that point about time, that's something we're really, really looking at right on the open and that point of confirmation, because for us, how quickly we can get that point of confirmation can tell us how aggressively we can manage our expectations on the trade. Like if we had taken maybe 30, 45 minutes to get over 66, 66.5 to confirm the trade, we at that point we might have already adjusted our expectations in our PTs to think this probably won't make it to the 3 ATR. But because it got over that within seven minutes of the open, we wanted to make sure that we're being patient enough to see if buyers can step in at each accepted price. But yeah, that's definitely a big thing we were watching.
And I think the other thing you want to look for is the buying at the whole numbers. So if something goes up 2 points, man, that's a lot, real fast, a little bit more than I thought. And now is there going to be around these whole numbers more buying at higher prices than I thought? So I'm looking for evidence that this can go up higher, get to my 3 ATR. And there's certain variables that go into that. And so when you can spot the move that's too much and then the buying that's too aggressive at higher prices, that leads to some of those moves.
Right. Yeah. Right. Definitely.
You didn't see that on the tape. If you went back and watched, there wasn't really that buyer who was just really stubborn, buying too high, too aggressively, when it tried to pull in on around the whole numbers.
After that, we see the lower high, the change of tape. I hit out the 1.6, and then that final make or break is that 66 that I was watching. Once we spend time under that, I'm out. And so some points that we're looking to improve on. One of the things is expanding our statistics on this trade specifically.
Yeah, I want to ask you guys this. To me, there's a best trade based on what you guys described. What is it?
For us, I believe that's that opening drive on these triple beat earnings.
Yeah, so you had your idea. Let me be clear, sorry. So you had your idea, this could run, this could go up a little bit on the open. But then you said really smartly, hey, I've got to make this into a trade. I've got to see it. I've got to be able to add more than my personal opinion to this particular idea. And there was a moment that was best, based on everything that you showed and described and talked about, that you can turn into the best trade of any of these. What was it?
I believe it's the turn at 66. I would say that hold, that pre-market high and that buyer stepping up is probably where we could have really sized up.
I would say, yeah, that was a good turn. I think the failed breakdown we had planned out, we could have managed that scenario better for better prices on the idea.
Where was that?
That was when we broke under 64.
Yeah. And it's interesting. You're building a trading business. And I mean, maybe I should speak more about this at a later time, because I have some pretty strong thoughts about how important it is to actually build a trading business. But part of building a trading business is being exposed to ideas that can work, but then you being able to figure out where you can make the most money. And so when you go back and you review these trades, you need to figure out, where can I make the most money? Where was the best risk reward trade for this opportunity? So I've got 2 or 3 trades that was inside of this opportunity, but where were the spots? Where were the specific spots where I could have been bigger? And I say this a lot to experienced guys who want to make a lot more money. Where specifically within your trading system could you have been bigger so you made more? And so I don't want to tell you the answer. In my trading brain, that 64 area was really the place where you can buy against that and see if it will run and make that into an A+ trade. I don't want to tell you that's the right answer. And if your trading brain shows you 66, as long as you have some reasons for that's fine. But you going back and understanding for your trading system where you could have made the most money, where you could have spotted the best risk reward opportunities, is you building your trading business, which is so important. I think a lot of times people go back and they're like, well, I could have made more money here, and they're not specific enough about it. Or they point out a trade that's not really within their trading system. Or they don't really take the time to understand. They see the trade and they're like, well, I could have made more money, and this was a good setup, this was a good setup. Well, which was the best setup? That makes a big sense. Like, we make money on our best setups.
To go off that, we have a chart book, a shared chart book going of each of these setups. For a similar reason, we want to make sure that with these, are there similar spots within these that we can look to add our edge behind? But yeah, we're going to keep analyzing and looking for those spots that we can definitely get big in.
Yeah, I didn't talk much during this review, and that's because you guys did a really good job. There wasn't much to say other than for me to keep my mouth shut and start listening to you guys. So very well done.
Appreciate it.
Think about some of those things, but excellent work here, guys.